Okay, it says I'm live. Never really works the first time. It counts up and then it resets. Let's just see. As soon as I get the YouTube notification that I'm live, then I know I'm live. And so far, I've got nothing. So I don't know if I'm live or not. We just reset. And there we go. It says I'm live. So I must be live at this point in time. Happy Sunday night to everybody. Let's see how we are doing in the futures market in Globex. Futures are down 10 points. Not much. You can't really tell anything. I've said this lots of times. You can't really tell anything from the night before. You used to be able to, but not so much anymore. NASDAQ is down on a percentage basis. Futures double what ES is down, what SPY is down, and Bitcoin fading away. Okay, we'll check in to that from time to time, and I'm sure everyone has their Fresca ready. Let's begin. What does it suggest when a company's ROE drops significantly despite strong earnings growth? It suggests that retained earnings are building up. And that the company is probably building cash because it's not redistributing its earnings in the form of either stock buybacks or dividends. So what happens when a company has strong net income? I got some. Oh, those are lines. I thought I had some stuff on my shirt, but look at that. They're just 3 lines. When a company has strong net income, excuse me, my back. It builds equity. So that over time, that cash builds up, the retained earnings account builds up. If they're not buying back shares, they're not increasing their dividend or issuing a special dividend, eventually the return on equity has to decline because the retained earnings account builds up so much. So usually companies that are in that situation typically will buy back shares or issue a share buyback to do nothing more than to boost ROE and return some of that money to shareholders. Which ETF that tracks S&P 500 would you buy if you lived in Europe? Well, the S&P 500 is nominally priced in US dollars. Even if you found an ETF that is priced in euros, you would still have the currency effect inside the ETF. So you may as well just buy it directly. And if you don't want the currency exposure, use a synthetic. And just keep rolling over your synthetic. Your synthetic requires no output of US dollars. How can I gain good insights in one industry? I have no experience, but I have CFA level 2. And now for an interview, I have to prepare for an industry, not from a US perspective, but generic. Well, if you have the applied level, I think there's at least 8, 9, or 10 industry understanding industry videos already up. If you don't, I'd start with a company's 10K, a company in the sector. That's usually how I start when I want to get to know a sub industry. Is I find a company or a couple of companies in that sub industry, and I start reading their 10Ks. I also look for an industry association for that sub industry. And I go to their website. They usually have a whole bunch of good information on their website as well. So it's a matter of being a good detective and solving the crime, right? I'm registering for CFA level 3 and was wondering about private markets. Do you think it's a robust curriculum? No, and could make sense. It's a nice low-level introduction that you could probably find on YouTube, or there's probably a good PDF online, understanding private markets PDF. Like, just Google that. You'll find a whole bunch of that, and I think that you could do better with something like that than you can with what is offered for the CFA curriculum. I felt that it was so super light, where it could have gone into a little bit more detail without getting technical. It could have gone into more detail, but it just didn't. And a lot of stuff borrowed from level 1 and level 2, sometimes for pages and pages. Like pricing out options in a bond, going on and on, page after page. It's like, this is level 2 stuff. What are you doing? So it's writers who are not familiar with the level 2 curriculum, who don't have this holistic view of everything, to know that, well, look, I'm just repeating a bunch of stuff. I didn't find it. If it were preparing me for private markets, I would say that it failed dramatically. I would be left with, well, I mean, this is stuff most of this stuff I already knew from level 1 and level 2. Why is the volatility skew for ON for September options higher than October? That is high. That's normally how it works. If you look at the volatility, the structure of volatility, and you are plotting several months, you'll find that, the near month is higher than the next month, which is higher than the month after that. So implied volatility tends to drop the further out you go. It's highest at the nearest dated. That is typical for all options, or for all companies. I hold Treasuries 2043. Where can I find an IBKR TWS how much coupon I've received from this position in Trader Workstation? I don't know where in Trader Workstation. Usually for that kind of thing, I just run a report. Just go to IB site directly, log into your account, and then under reports, just generate a report, and scroll down. There's little tabs. One will say interest and accruals. Click on that. It'll tell you how much interest you've earned on those. September 3rd, stocks like FCX and ON saw sharp declines, but IV didn't rise significantly. Why might IV not reflect the price drop, given that you'd typically expect increased hedging during a sell-off? Increased hedging at the index level, but there was no real catalyst. Like, there wasn't anything that was market wide. It was a market wide sell-off, but it was endogenously induced. It wasn't as if there was something outside the system which gave a lot of uncertainty as to how long this thing could last. This last week was probably more along the lines of profit taking than oh my God, we got to get out. When the yen strengthened, there was a concern about, well, where is all the risk of the carry trade? We don't know. Let's just get out of everything. So there was a rush just to get out because you didn't know how bad it was going to be. So in cases like that, implied volatility would increase a lot because it's something exogenous. But on just profit taking, you'll get some increase in implied volatility, but certainly not the spikes you would get when fear shows up. So that is saying that the selling was probably a lot of rebalancing and profit taking, and not really fear selling of something. I followed Reddit options group to learn more. One user bought NVIDIA February 110 calls at 25. Oof, lost due to sharp stock drop. So Delta will take it away from you. He asked how to limit losses. To limit losses, whatever delta you have, no matter what it is you have, whether you're long or whether you're short, your position is losing money. What you want to do is get your delta towards zero. So if you're long shares and you're losing money, either sell some shares to get your delta towards zero, or take on an option that moves your delta towards zero. Simple as that. Since he had the call and he was long the call, he would have had positive delta. He needed to take on negative delta at that point. Since he's losing on it, what you would do is you'd look at the delta on your option. You'd say, well, my option has 40 delta. If you want to get delta neutral, short 40 shares of NVIDIA, you're delta neutral, right? You're delta neutral right there, which would have been probably the easiest thing to do as it was dropping. You look at your delta and you short enough shares to bring your delta down. You don't have to short 100 shares of NVIDIA if you have one call option, because your call might only have a delta of 0.4. You only need to short 40 and you're delta neutral. As the stock keeps dropping, you'll get delta positive because you'll have 40 deltas all the way down, but your call deltas will decrease the lower NVIDIA goes. So as it's dropping, what you can do is you can buy to cover certain shares. Your delta's 40, your delta drops to 30, cover 10 shares. Your delta drops to 20, cover 10 more shares. And you should not lose any money on your call if you keep your delta close to zero as it's dropping. But you can't have hope. You can't just say, no, you know what? I'm not going to do that. Because what if it recovers? What if it recovers? Right? Everyone starts doing that second order thinking. I'm losing money. I can do this. Oh, but what if it recovers? I should wait. And then it drops a bit more. It's like, oh, I should have done it. Okay, if it rallies up to that point, I'll do it again. And it doesn't. It's like, oh, I should have covered. And then it rallies up to the point where you say, no, I'll wait. Maybe it'll go. And you talk yourself out of doing the very thing you want to do. The moment you realize you're in trouble, don't even think. You have to act right away. Yeah, it could re-rally. It could. That rarely ever happens on an earnings sell-off. If you're 1 hour into the day and it's still red and it's down, you may get a small bounce up, but you'll always get the legs down. It rarely ever happens. You play the odds that it would continue on. Not only that, the person who bought the call should know exactly what they were doing. They really should understand the situation that they're in and what the drivers are. And when they released their earnings and they gave guidance, should have been able to do a quick calculation and say, wait a minute, you're guiding to flat earnings. So EPS next quarter will be the same as EPS this quarter. Your costs are rising faster than your revenues and your gross margins are shrinking. This is not a good combination. And this thing's had a great run. It's probably all priced in. So it was probably somebody that was gambling and lost. Don't gamble. There's one way to avoid trouble. Don't gamble. I consider selling 0.3 delta October puts to buy the stock lower, but it adds delta to a losing position. That's right. And you don't do that. I saw selling October at the money calls, but naked calls are too risky. Yeah, just if you have the options, add the underlying. Non-finance related topic. How do you manage your sides? Oh, your desires, your sides. I usually don't order side dishes when I order a meal. Your desires. How do I manage my desires? If you have the wherewithal to begin to manage your desires, your desires aren't really desires. Your desires usually manage you. People often are unsatisfied, regardless of their career success or love life, leaving them unhappy. Yeah, well, I'm not a therapist or a counselor by a long shot, but I think the first step is to figure out what's making you unhappy. Why are you unhappy? Something is missing. You say that you regardless of their career success or love life, something's making you unhappy. You got to figure that out first. I knew a guy. It sounds like a made up story. I met a politician. I met a person named Harry, and Harry told me I knew a guy once who had a particular type of job, and he felt that because of the visibility of his job, he had to conduct himself in a certain way, and he had certain I guess you'd say certain desires. He was attracted, I'll just say it, he was attracted to a certain type of woman, right? And he thought that he couldn't pursue that because what would they say? I couldn't bring one to a business function. I couldn't bring a girl like that to a business function. It's like, well, who the fuck cares? You're denying who you are and to parade around as a phony. Who the hell cares? Like, I think you're putting too much stress on what other people think. Who cares if that's the type of woman you like? If that's what you want, if you want, you know, women that look like that, then do it. Who cares? Who cares? Right? But he denied himself that, and I think he was unhappy because of that. Um, so I don't know how to answer that question in any good way, other than if you know what you want, but you feel that if you expressed what you want, people would judge you or it just wouldn't work out. So you don't go after what you want. That's just a recipe for unhappiness. And that's eventually going to blow up on you. And you're eventually going to be who you want to be. May as well be who you want to be right now if it's not hurting anybody, right? I'm sure you've experienced similar emotions in your life. How do you cope with them? Most desires, and now I'm going to step into counselor role here as best I can, and there might be some people out there with more psychological training behind them going, "Oh God, he doesn't know what he's talking about." Most desires are either emotion based or entertainment based. Emotion based in the sense that there's somebody in your life that you want that either you can't say anything about or they don't want you, or there's some form of entertainment you want. And entertainment could be anything, whether it be alcohol, drugs, food, the clubs, whatever the case is. um, most desires are one of those two. For the entertainment based ones, just find something else that's entertaining, that can replace what you feel you can't have. Um, I I found the markets, and that was my only desire, and I live it. As far as people go, if you're not saying something, you may as well. I mean, if you haven't said anything, you may as well. In 10 years, it's not going to matter. But not saying anything in 10 years will haunt you. So you say something, and if you're rejected, well, at least it's done. At least you know. But if you know the other person just doesn't want you, um, walk away. I'm telling you right now, walk away, because you're never going to change that mind. And the more you try, the more they'll become convinced that no, they do not want anything to do with you. Walk away. You just swallow that one and walk away. That's the best advice I can give on that one. Having, you know, kind of been in that situation in my mid 20s, not walking away prolongs the inevitable of having to walk away. Walk away. As far as anything else goes, if you're holding back because of what you think other people will think of you, that's not going to end well for you, right? Would you mind elaborating on the spread between U6 unemployment rate and the unemployment rate, and U3? How it widens. You have two-tier economy where one side could be in recession, if not depression already. Well, for that one, just think of the opposite. Imagine that U6 and U3 were identical. This would say that they're beyond the unemployment rate that we calculate. There is no one who is long-term unemployed but simply has given up. There is no one who is underemployed or working part-time but would like a full-time job, but they simply can't. There's none of that. That the unemployment rate is U3 equals U6, and that's it. The Bigger the spread between U3 and U6, the more and more there are people who have given up, who have part-time jobs, but would like a full-time job, but can't find one. So that's a proportion, right? It's a percentage, 7%, 8%, 9%, 10%. Well, that's six, that's seven, that eight, that 9% starts to become a bigger and bigger and bigger number of people because you're multiplying. You got the same group of people. One measure saying, oh, it's 4%, another measure saying it's 8%. So it's double the amount of people. If it were 12%, then it's triple the amount of people. So you could have an economy where unemployment is low, 4%, but U6, those who have given up, those who are underemployed, all of that might be 10%. They're not counted as unemployed because of one reason or another, usually because if you're not looking for a job, if you've given up, you're not unemployed, but you really are. That ends up being a big group of people who are in their lives in recession, if not depression. When I say depression, I don't mean the mental depression. I mean in the economic sense. They're in a depression. So, recession is when your neighbor loses a job. Depression is when you lose your job. And if that number, if the spread gets wider and wider, then under the surface, there is a problem, which is, it's an economic problem, but a bigger social problem. Where we leave off, could the recent sector outperformance in utilities and healthcare versus cyclical parts of the market indicate that investors are positioning themselves for potential recession stock market rout? For utilities, the outperformance of utilities is positioning themselves for rate cuts because they are very bond-like in their cash flow. So I'd say more rate cuts there. Healthcare, it's a safer sector. It's defensive. So you could, I'd say that your statement has some validity to it. Is selling puts on VIX a valid strategy? Anything is a valid strategy if the conditions are right. At some bottoms, it seems like it would make income without much risk when it's sitting at 15. If VIX is really, really low, you'll find that there's very little premium in the puts. So for the capital you would have to tie up for the margin, it might not be worth it. Have you taken a short position on VIX? Nope. I'm not sure if that's a better idea than at the money calls and XSP. No, I have not taken a short position on VIX. I don't touch VIX. You're taking a short position in SPY and IWM. At what level do you see a close on those positions and maybe a long position? What levels? It's a good question. I don't know that I would close them and go long at this point where we happen to be sitting without a rate cut, without any rate cut at all. I don't know that I'd flip to a long position. I'd more likely sell puts on the underlyings somewhere lower. And the puts would act like a natural cover, that if they are put to me, then they're put to me at a price that, okay, that's fine. It would cover my short position. And if it's not, well, I think that if we get another run up from here and start heading back up to 21 and a half, 22 times forward earnings, let's do it again. Let's short this market again, because it's, I think fundamentally, where are we going to go? What better news do you want? All the news is out there. We're beginning the rate cutting cycle. What better news do you want? What more news do you want to price in? What are your key criteria for stocks that would make part of your long-term portfolio? The biggest one is undervalued. I don't want to buy anything overvalued. I don't care about momentum, and I don't want to buy anything fairly valued. I want to steal the stuff. I want it to be completely undervalued. So that is my criteria there. So you could say that I'm value to deep value, and I sleep well at night. I have low volatility, nice high Sharpe ratios. Well, I shouldn't say that. You can't really use a Sharpe ratio. Once you start using options, you have a non-normal distribution of returns. The standard deviation is meaningless, and that's the denominator for the Sharpe ratio. So it's probably not the best measure, but let's go ahead and use it anyways. Very high Sharpe ratio, and I sleep well at night, and I do very well. I'm having a killer year so far. Almost every bullet I fired has hit its target. Everything is working out, eerily working out. Everything's working out too well that I'm expecting at some point to get completely crushed by something. I don't know what, but almost every call I've been making has gone exactly where I thought it would go. Well, maybe not all of them. Yeah, Goodyear tires still got me pissed off. I'll work my way out of that one just out of pride. Lamb Weston, I think, is holding up pretty nicely in the mid 60s and giving me lots of opportunity to lower my cost. By the time we get past September options, if it's sitting below 65 and above 60, if it's sitting in that range, I've lowered my average price to below where the stock price would be. I can exit right there without any loss. But I'm probably not. I'm probably going to keep playing it. I hope the implied volatility and the premium stay nice and fat on that one. I think I could do really, really well. I'm hoping it pretty much stays right where it is, but market might have a different position on that. If it goes below 60, even better. Even better if it goes below 60. So yeah, the criteria is undervalued, a dividend and options. Give me something undervalued with no dividend, no options. It would have to be compelling. But as long as it has a dividend and options, to me, it's a no-brainer. Process once you enter a short call that goes the wrong way. How would you solve this situation? If you have a short call that goes the wrong way, buy the underlying. As soon as you realize it's going the wrong way, either give up, either get out, or if you think it's just a short-term issue and you're still positive that it'll stay under that call, buy the underlying and see if you can roll your call forward to buy extra premium and buy extra time and just short some. You don't have to short 100 shares. If your delta is 0.6, let's say you entered at a delta of 0.3 and your delta is now 0.6, short 30 shares, you're back to a delta of 0.3, which you were comfortable with to begin with, right? You were comfortable with a delta of 0.3. You're now at a delta of 0.3 all over again. Just short some shares, that's all. How viable is it of a strategy to commit money to TLT given interest rate cutting narrative? That's specifically when you'd want to be long TLT. TLT is a portfolio of long bonds with a duration of 16. So as interest rates drop, it will increase. Every 100 basis points, you're going to get a 16% increase in the price of TLT. Some of that is already priced in to the bonds. That I think that if you do get 200 basis points of cuts over the next year, you might only see maybe an extra 10 or 15% increase in TLT. Certainly not 32, because I think some of that 200, the anticipation of it is already priced into the long end of the curve. You might get down to a 3% yield on the 30-year instead of 4. That's still 16% up. That still gets you to 116 on TLT. Yeah, I that now's the time to do it. What is the proportion of your short versus longs in your portfolio? I have no idea. I don't, at any given time, I really don't know. I still have positive dollar delta beta. I think I do. Um, that's a good question. I have been reducing my Canadian REIT positions. I'm out of Interrent, lowering Minto, so I haven't looked at it for a while. Only because I'm sitting on such a large cash buffer, I don't really need to pay attention to it, because the cash is still earning a nice return. Plus, I have externally managed money, which I don't think has any short position in it at all. So I from day to day, I don't know the answer to that, but I don't think that I have negative overall negative beta at this point because I added a bunch of long positions in some Canadian positions. If you have the applied level, if you've been through my new positions, I added a bunch of of new positions, and I'm long a bunch of interest rate sensitive sectors, utilities, uh, REITs. Well, so when you're short puts, you're long. So GM, FCX. I mean, there's a whole bunch of them. So yeah, I think it would. I don't think that I would have negative. Well, I got a big position on Tesla in terms of puts. But still, I don't think that would. No, I don't think that I'm negative on a portfolio level. I still think I'm positive. Thoughts on tapping into home equity to invest in the market. For someone who locked in a high mortgage rate last year and is going to refi to lower rate in the near future. Mm, I'd need to know a hell of a lot more about you before I can answer that question. That is just not a standard strategy that everyone should follow. I'd have to know a hell of a lot more about you. So I'm going to pass on that. Um, yeah, I'm going to pass on that one. Making my way through level one prep, noticed overlap with my MBA. Toughest topics still stats, but I think it's more of a nomenclature issue for me. Do you recommend more reps or other readings? Move on other readings. You can always come back to this one. You know, what you don't want to do is just spend all your time on this particular hill and you don't have time for the other stuff. You can come back to this. Make my way through. Okay. Is it probable that one could create passively managed less than $1 million portfolio that consistently generates a 20%? No. If so, what would be? That doesn't exist. Everybody would want that. Everybody would take that hands down. Consistently generates 20 plus returns, passively managed. Everybody wants that. You're looking for what everybody wants. It doesn't exist. It's a unicorn you're looking for. It doesn't exist. If you want to consistently generate 20%, you're going to have to get active somewhere. That doesn't exist. Doesn't exist. Doesn't exist. You're going to have to take on some risk somewhere. Now, you could take on illiquidity. You could find a good private asset manager, and maybe you could put some money there. But with less than $1 million, I doubt you would be a candidate for any private fund. That's way, way, way too small. So the answer is no. It is not probable at all. Now, if you say possible, I would say, sure, it's possible, just not very probable. I'd say the probability of finding something like that is 0.00000001. Not going to say it doesn't exist, but it's so improbable as to not exist. Where can one find the operating margins data? Everything is in the description box. Just look in the description box, and you can look for the link to the S&P spreadsheet, and you can look for what's it called? This week in earnings. The link to this week in earnings. Everything I use is in the description box. I bought the applied level. if I bought the applied level after September 9th, will I still have access to all the financial modeling? Yeah, that's part of the applied level. It's not an extra module. It is part of what I promised would be in the applied level. Loved your take on MMT. Lost that comment. Let's scroll back up. Wondering if 2020-21 monetary and fiscal actions resemble MMT. Resemble? Seems like it could resemble it by accident. I don't think that anyone was really invoking that or thinking that that's what they were doing. But resembled it, sure. Yeah, I think it's true that if you just looked at the output, the data, you would say, yeah, it looks like there was some MMT involved here, but I don't know that was the intention. Which SEC filings do you read besides 10K, 10Q, Corporate Insight? That's about it. You said you couldn't use your real name when purchasing other financial modeling courses. Why is that? So I can tell you my experience with our site over the years. We've had competitors subscribe to our CFA content blatantly. We can see the name. One even asked if it was okay, and I said, yeah, this was before we required that you verify that you are a CFA candidate. So we know that we trained other providers, mostly me. I mean, when I owned it, it was all my videos. So I know I was training other providers. I know that. I didn't do anything about it. I didn't, part of me thought, no, let's just, when I can see who this is, I know who this is, let's just reverse it right away. Let's just block them out. But they'll just come back with another name. They'll just get somebody else to buy for them. So it's better to keep an eye on where they're visiting, because we can see their pathway. It's better to keep an eye on them and see what they're doing. Are they stealing our question bank? Are they going from video to video to video to video to video? If they are, they're downloading. Are they found a way to download? So they're more likely to do something like that than anybody else. So let's just watch them. Let's just see what they do. For the most part, those things really didn't happen. We did get reports back that there were some CFA schools in the Middle East where all the candidates were sitting and my video was just playing on a big screen. That I was, for what they paid, I was everybody's teacher. And they would just play the video on the big screen for everybody to see. I got reports of that back, even a little picture of my stuff on the screen in a room full of students. So we know that was going on. Now I could have used that in marketing, that why would you subscribe to so-and-so? And I could have put their name up and said, they subscribe to us. Why not hear it from us directly? But I didn't use that in the marketing at all. Even with the applied level, we have a competitor that subscribed. I saw the name come through and, no hiding of the name or anything. I thought, is this the person? The address and everything checked out. So I sent it to somebody else who knows them. I said, is this who I think it is? And the answer back was, yep. Okay, well, I know in the applied level, we have competitors that are actually looking at what we're doing and, I don't know, maybe trying to figure out if they can do the same thing or what they can learn from it. How many people are in their organization are viewing it? I don't know. I don't know these things. If I used my name with another company, it allows them to use that in their marketing. Hey, so-and-so subscribes to us. Why wouldn't you? And I'm not subscribing, or I'm not trying to get access to them to learn. I'm trying to get access to them to see what it is they're doing. How are they structuring what they do? Um, because if there's an aspect of it, let's say I subscribe to one and it's super good, and I think I can't do better than this. This is top end stuff. Then I would say, why would I even bother replicating this? Let's reach out to this company and let's see if there's some way we can work together. I mean, that would be the easiest thing to do. Why replicate what's already being done well? What I have found is one company really sucks. My God, one company is so bad. I think any money they take from you is just a bloody crime. It was so bad. After about an hour of it, I thought, okay, this is just horrible. This is horrible. Two are pretty good. You look at them and go, okay, this is pretty good stuff. But they're pretty good at Excel. They're a heavy focus on Excel, and you're watching what they're doing, and you can hear their hands just flying across the keyboard as they're doing things, and things are changing on the screens. Like, okay, as far as Excel skill goes, these guys are way ahead of me. I can do all of those commands, but not at that speed. Not at that speed. I use my mouse and I know where to click and everything, but I'm nowhere near that speed at all. So as far as Excel goes, they're way ahead of me. Where the hole is, and this is really what I wanted to see, is how much time do they spend on the setup? How much time do they spend on the research? How much time do they spend saying, okay, here's a 10K. Let's say you put somebody in a room and you say, here's a 10K, and here's a blank Excel worksheet. Go. How do you even begin? Excel is the last thing you use. All of your work is in the front end. All of your work is understanding the business, and then you go through the line items and you say, well, what are the drivers of this line? What are the drivers of this line? And you have to collapse some things because two different lines might have the same drivers. You might have to expand some categories because there are different drivers within the same category. It's a lot of work on the front end. And then you have to think, okay, well, what drives revenue? These two things. Well, how am I going to model that? Where's the information? It's so much work on the front end. And I found that a lot of that was missing because you're given a lot of the assumption, okay, well, we're going to model revenues this way. Well, but why this way? But why not this way? Why not that way? Why not another way? Like, why this way? And that wasn't sort of well developed enough. Once you're done understanding how you're going to model something, the actual Excel work might take you 2 or 3 hours to put it together. Once you've written your algorithms down on paper, it's not going to take long to get it done in Excel. I find more tedious than anything to get it done in Excel. But a lot of the front end stuff is missing. So after going through a number of them, I thought, okay, I know exactly where I can fill the gap. I'm not going to try to be, the world's greatest Excel expert. There's lots of good tutorials on YouTube if you want to learn Excel. Lots of good ones. I'm going to show you how to go from a 10K with no highlighting and a blank spreadsheet to a model. I'm going to show you how to get it done through that, and we're going to use Costco, a deceptively simple company. And it is deceptively simple. It's not as straightforward as what you think it is in forecasting some things out. And its value is deceptive as well, because there's this belief that Costco is overvalued. Not if you account for the fact that it uses historical cost method for its property and its buildings, and that some of these properties were bought 40 years ago. Once you account for that fact, it's like, well, hang on a second. This asset category is understated by some 120 billion minimum. So you got to take that off the value of Costco before you figure out. So Costco is a great one to start with because it is deceptively simple. but it is rather complex. We're going to build the whole thing up. That's why I don't use my name, because I don't want some other company to be able to use my name in their marketing, saying so and so, because I have a certain reputation in the CFA community. I don't want, so and so uses us, you may as well. So I don't use my name. Not only that, when other people have used their names with me, I did contemplate canceling them, saying, "Oh no, I know, I can't let you into my site." They would have just come back with a different name. If I try to use mine, maybe they cancel me, or maybe they use it in some marketing. Right? Does that make sense? It's like you would not want to capture a picture of the CEO of Coca-Cola drinking a Pepsi, because that can be taken out of context, because the CEO could say, I do it all the time. I drink a whole bunch of other people's soda just to benchmark where we are. But on its own, it could be taken out of context, right? I'm looking to buy a call with the idea of stepping into a risk reversal. I typically sell with 30 to sell for how many days to expiration? Oh, would you buy the call? For a risk reversal, well, you're sort of hoping that it's going to reverse in the short term. I mean, you certainly wouldn't do a 1-year risk reversal. I mean, you'll get delta out of that, but you won't get vega. And I think you want both on a risk reversal. Is you want the implied volatility to come out of the puts really fast, and delta to move up the price of the call. So usually you put in risk reversals after significant sell-offs. You could argue that we've had that last week, but we're only 4.5% below all-time highs, with still almost 21 on a forward multiple. Don't really know that I would be too eager on risk reversals just yet. You mentioned that there will be a valuation course in January as part of the financial modeling program, but you also noted that you don't use valuations in your investment process. That's right. I don't use valuations. I don't build these models for what I'm doing. And for a retail investor, it's a little overkill. But the applied level is about 80% CFA community, 20% non, about 80% the CFA community. If you look at the A, the way we did the A, and you take off the leg, the sideways part of the A, you take off the leg, you get the number 4, 3 levels to CFA, 4, this is called applied. I can't use the letters, right? And I can't actually say it, but I think you know where I'm going. So we have a significant amount of subscribers that are going to go to the real world in some kind of career, where they're going to have to do financial modeling and do evaluation. And if this is, me applying the concepts from CFA, I will have to apply them to see how that's done. One of the things you'll come to realize at the end of the financial modeling module is that our forecasts are built on a mountain of assumptions, a bunch of guesses, 30, 40 guesses about this, about that, about this, about that, about this. How's this going to unfold? How's that? A lot of things are just going to be straight lined, meaning that you just forecast out the same number year after year. Just a mountain of guesses, and at the end of it all, you may be thinking, but you're just guessing. Informed guesses, educated guesses, but guesses nonetheless. Yes, it's built on a mountain of guesses. And then we're going to value it. We're going to have to get a cost of capital, which is, again, going to be another big guess, a better guess, because we do see the cost of debt. We know what their tax rate is, so we can come up with what their cost of debt is. But as far as cost of equity goes, well, there's a bit of a guessing component in there. We can get the middle of some distribution, but it's still a guess. So the stock price we get after evaluation is a good guess. It's just a guess. That's not the important thing. Getting that price is unimportant. You take, let's say you made 30 guesses along the way about how, the days of receivables outstanding, days of inventory, the cash bill, all of these guesses, and then you start stressing them. You take each of those guesses and you start moving them, and you look at that price. Well, let's move inventory from 18 days to 24 days. And the price, your estimate of price doesn't move that much. I'll move it to 40 days. It doesn't move that much. Move it to 60. Yeah, it moves a little bit. You say, okay, well, then inventory is not going to be a big deal for this company. Right away, you can cross off one of the things that you forecasted out, saying the price in my model is just not sensitive to this assumption at all. So get rid of it. You might get rid of 25 of those 30 guesses by saying the price is just not sensitive to these assumptions. So that's not what's going to take me down. And then the other 5, you might find, okay, the stock price is sensitive to these things. So what am I looking at when I'm looking at this stock, these 5 things, or these 4, these 5 things? These are the 5 things that are going to affect valuation. And 1 or 2 of them are really going to affect valuation. That's what you got your eye on. Those are the things you care about. So you ask yourself, do I think we're going to have the environment going forward where these 2 drivers are going to be in play? And if they are, then this is a buy. If not, then this is not a buy. So as you're watching the environment, you could say, okay, this thing looks like it's disappearing, or this driver looks like it's weakening. That's a critical driver for the stock that I have. I'm out, or I need to protect myself, or now's the time to sell calls. That's where the power of it comes in, is determining which of those mountains of assumptions, which 3 or 4 of all those assumptions move, when you stress those assumptions, move your stock price the most. Those are the things that'll take you down. That's where the power is in knowing those things. That's it in a nutshell. The price you come up with it's just a guess. When you say, okay, well, what did you have to do to come up with that price? Well, I assumed this and this and this and this and this, and then I assumed this and this and this and this, and then I assumed this and this and this and this, and I guessed at this and this and this and this and this and this and this. I made 40 guesses, and then I guessed at the cost of capital, and then I came up with the price. That is nowhere near any kind of exact price. That's not the thing you care about. The thing you care about is the sensitivity of that price to the guesses you've made. That's the goal of it. Besides the so-called debt ceiling, what makes currently fiscal monetary policy different from MMT? I think I missed that one. So we can pass on that because I think I did answer that. Let's see. Are you familiar with the stock AJG? Nope. Why is it valued so high as an insurance company? I'm not familiar with it. How do you pay attention to detail? I don't know how to answer that question. If you're looking for the answer to a question, then you will pay attention to detail because the words will matter. But if you are reading something and you have no questions in your head, the detail, you're not even going to notice what's what, because you're reading stuff and you're going, okay, is any of this important? I don't know, because it doesn't seem to answer any question you have. But if you have a question and you're reading something, you'll notice that you will pay attention to detail. So I would say, have your questions up front. Why am I going to read this? What questions do I have that I think this can answer? What are my questions? What do I need the answer to right now? Or what would I like the answer to? Then the detail will matter. What do you think about the currency? The currency state. Oh, I think you mean the current state of Gen AI. Any opinion The enterprise side implementation, for what I hear from several IT companies, it would 3 to 5 years to be relevant. I think that's right. I think you've had a significant breakthrough, um, but it is far from, I think, far from ready to be deployed in anything. I've used some sites that have the chat bots, the AI chat bots, and it's like frustrating to no hell because they just keep sending you to the Q&A bank that they, oh, here's frequently asked question, here's a link to your, here's it. It's like, that's not what I'm asking. That's not what I'm asking. Um, all they can do is look at your question and say, okay, well, it looks like this, go here. Oh, it looks like this, go here. And maybe for some people it handles that, but it is certainly not generative. It's just an algorithm. It's predictive in the sense that, or probabilistic in the sense that we think you're thinking about this, but this has been around for quite some time. Um, no, I think that's right. I think it's 3 to 5 years before we start thinking about, well, what applications make sense for this thing where we can trust the output of this stuff. So it is going to be a while. What is your job's name? What is my job's name? I don't have a job. It doesn't have a name. Might sound like a silly question, but how do you access live data on IBKR? You have to subscribe to it. There are subscription fees that you have to pay. I have the US bundle. I think it's 40 or 45 bucks US a month, unless you generate so much in trading commissions, and it's free. Just in a given day, I can generate that amount. So I don't pay for it. How do people find arbitrage opportunities? It's not that easy. Are they really hard to find? Pretty much. Pretty much. Can you create a subscription for people who want to learn the reasoning behind your market positions? Make people sign a document that the description is only for educational purposes? The reasoning behind my market positions. Can you create a subscription for people who want to learn the reasoning behind? I do explain the reasoning behind my positions. I don't think I need to make a document that says it's for educational purposes only, because I've said many, many, many times throughout my videos, don't copy me. I'm showing you how I do things. That does not mean it's appropriate for you at all. You got to do your own homework. 80% of my subscribers are in the CFA community. They're trained. If you're a level 3 and you're still blindly just copying other people, you're not learning. You haven't applied anything you've learned. You could say, okay, well, those are good ideas. Let me take it from here. Let me see if they're appropriate for me. But I don't think we need a subscription for that. That's if it's I already do that. So maybe you could be more clear by what you mean, in case you didn't use the words that were necessary, so that I saw that you were saying something different. Recently got the applied level, and I'm really looking forward to the Costco case study. Yeah, it's up tomorrow. We're not going to do any Excel tomorrow because you got to know Costco. Before we even begin to put anything in Excel, you got to know Costco. You got to know where to get the statements from. You got to know where to get all the financials from. You have to be introduced to their 10K. And then there's another video up that really just talks about what are we doing when we're modeling something. What's the goal? And you'll see all of the things you have to think about in planning this out before you even open a spreadsheet. Next week, we'll open a spreadsheet. We'll set up a few tabs, and we'll start looking at how we prepare it to enter the historical data. And it is not just simply a matter of download and here you go. There are ways to get the Excel spreadsheets and get all the data in Excel spreadsheets, and you can cut and paste. But there's pre-work that has to be done. You have to look at the line items and say, am I going to model it this way? For example, long-term debt, short-term debt. Usually you collapse them in one line because they have the same driver. So you usually just collapse them in one line, but you don't have current portion of long-term debt and long-term debt. Even though the balance sheet on Costco will have that, you wouldn't model it out that way. So why not just collapse it? So there's thinking that you have to do beforehand. Costco is easy. For the income statement, there's not a lot you got to do. For the cash flow statement, yeah, we're going to collapse some things, and for the balance sheet, there are some line items that I don't know that it's worth forecasting anything out, but we have to make those decisions up front. You're disappearing from level 1. Will that be the case for all levels in time? In time. Yeah, in time. There has to be new voices in the videos. That was part of the deal. That if I were going to continue to do all of the work, I may as well continue to own it, right? I may as well continue to own it if I'm going to do all the work. I may as well have all the upside. So it was over time that I would find my way outside of the videos, and new voices would find their way into the videos. And then that leaves me free to do the applied level. So in time, yes. In time, yes. I'm in the UK. Would you be able to recommend any scholar or expert similar to yourself who focuses on the UK market? Not really. I don't know. I don't follow the UK market. So there may be some good voices on YouTube that talk about the UK market, but I would never search for it or find it. So it would never show up in my feed because it would be irrelevant for me. So I don't really know. Since most of your analysis examples relate to the US or Canada. But you could do the same thing. Just follow the process. Look at your economic calendar, assess the data that's come in, go to the Bank of England, go to the Bank of England and see what they have available there. What is your treasury? The Exchequer, I think. See, I wouldn't even know. They'll have all the yields for you. Whoever issues the UK debt, they'll have all the yields for you. Same thing as the treasury here. You don't need me to do it. Just replicate the same screens I have, and then you can become the voice on YouTube that follows the UK market. In order to have the exact same return doing a synthetic as being long, you'll have to invest the credit received with a return that equals the instant compounding dividend yield, correct? No, the dividend yield will be in the put. The continuously compounded dividend yield will be in the put. It'll be in there. So no, you don't have to do that. If you took the money that you would use to buy the shares and you put it in a money market fund with the same expiration as the options, let's say you bought 6-month options and you bought a 6-month treasury, you would cancel out the cost of carry for the risk-free rate completely. If you use the synthetic for the return and the cash to get the positive carry to offset the negative carry, then you would actually get the dividend, the full dividend. Which dividend yield is used? The last quarter annualized or the annual? Well, that one is hard to tell because that's probably implied as well. If there is an expectation that a yield is going to increase or the dividend is going to increase, sometimes with an index, it will be the continuously compounded yield on the index because these things they don't just pay 4 times a year. The 500 companies all pay at different times. Even though the SPY pays 4 times a year, the underlying companies all pay at different times. So the options on SPY will use continuously compound dividend yield. But on a particular stock, because you know exactly when the next 4 dividends are, it's just going to be the present value of that dividend. I don't know that it would be continuously compounded at the level of the stock, although the model would require because it uses continuous compounding, unless because it's logarithmic. So yeah, but it could be just translated at the time that it's being done. I just have faith that it's in there because the way of calculating it has to include it. Which method of valuation you use to value your own company before selling? Private companies are usually sold as a multiple of EBITDA because private equity looks for companies with cash flows that can support debt, because they'll put some equity in and then they lever it up and they buy it with debt and they use the cash flow to pay down the debt. So usually it is valued at some multiple of EBITDA, at least for private companies. Where do we find the new financial modeling course on MM? It will be in sector studies. The first showing of it will be tomorrow. I still have 2 more videos to narrate, which I'll probably do, maybe one tonight and one tomorrow. Sometime tomorrow afternoon, they'll be up. 1, 2. I've got 2 of the videos done. I got 2 more to go. It's been too long since my last Q&A. I'm so excited for your FM at Costco and appreciate your work. Well, thank you. Last time you used a market analogy with a role-playing game. Are you into them? I used to be. Yeah, I used to be into role-playing games. My biggest one was Might and Magic. It had, I think, 8 different Might and Magic 1 to 8. And then they went online. They tried to do an online, and I had access to the beta. But it had issues. It had a whole bunch of restrictions about how many of each, in your army, how many of each you can add, and then you suddenly get into a fight you can't win, and the only way to fix it is to go back to the beginning and anticipate that, because you use the wrong troops. And there was just no way to win it. And I just thought, this is, I should be able to go back and do something and then come back to this and win it. But there was no way to change. Like, it just didn't make a lot of sense. So I don't think it survived. I don't think it survived at all. I don't have time for it now anyway, so. First part is out Monday the 9th. Yeah. What's your view on copper and aluminum? Copper long-term, yes. Aluminum, I seem to think long-term, yes, as well, because if you want to increase range on vehicles, whether it be internal combustion or EV, you're going to have to adopt aluminum. But I think right now, what port is it? They've just expanded their port, and it's not Capesize. It's even bigger than the Capesize. Newcastle Max, I think, is just bulker after bulker after bulker of bauxite going out. So you could be in significant oversupply. What country is it coming from? It's an island country, and it's just vessel after vessel of it. I forget. So not too bullish on aluminum at this point. Did you sign the hats by yourself or make someone do it? Oh no, I signed them myself. You can't get someone to sign the hat. You got to do it yourself. I mean, what would be the point? What would be the point if you wanted somebody to sign something and they had, an assistant do it. What's the point? How's the new chair? New chair is right here. I bought one of these, this Anda seat thing. I sat in it in a Staples for a while, and I thought this is really good. So I always said that if I could find a seat like my truck seat, like why don't seat manufacturers make office chairs, right? Because it's you're sitting in a driver's seat sometimes for hours upon hours upon hours, and you know it's not like you're sitting in an office chair. An office chair after a while it's like, this is uncomfortable. You can sit in one of those chairs for a 9-10 hour drive. Why don't they make office chairs? And they do. This company makes chairs for racing cars. So I sat in it and I thought, this is not bad. I said, well, you know what? Every chair you sit in for the first 5 minutes is okay. I'm going to just sit here for half an hour. And I did. If you go into Staples, they have these, all of the racks at the back where they stack all the chairs up. So I was sitting underneath the rack, just sitting in the chair, just looking around. Can I help you? No, just hanging out. I sat there for a while. I said, okay, I'll buy one. Oh, we're out of stock. It's like, oh, you got to be kidding me. So I had to go to another Staples to pick that one up. And I've been sitting on it for a while, and I don't know that I really like this is kind of neat. These things right here are kind of neat because I have to sometimes sit right up close to the desk and I can't lean back because I need to see the screen, and I write because my tablet is straight down here, the Cintiq I use. So I need to be right above it, and I don't want to be leaning over all the time. This is really good for that. But just to sit into, like if I were watching something on YouTube, it's not that great. I don't really like it for that. I'm going to try to take off the two paddings and see if it gets more comfortable. But as far as having to sit and write out my screens, it's a great chair. It's a great chair. I don't know about, if I had to sit in it for 2 hours and watch a movie online, I don't think I'd want to do that at all. But I've got this chair I'm sitting in here, which is, you could see it here. It's got a lower back to it. It's a smaller chair. It's a flatter chair. It's a harder chair. Then I think I got like 4 or 5 different types of chairs around here, depending on how I feel. Have you tried Herman Miller? No. Marketing says they work like magic and that you never get tired from sitting for a long time. No. Maybe I have. I just don't know the names. You said you have investment thesis, but is not more correct to call it investment hypotheses until you probe it's correct? I don't know. I think we're splitting hairs there. An investment thesis is saying, with interest rates coming down, interest rate sensitive sectors should perform well. That's your investment thesis. So then you go out looking for companies, good companies in those particular sectors. A hypothesis, I think, would be more like, okay, I have this company and it's got a significant real estate position on its balance sheet. I think it might have a duration component. That's a hypothesis. Now I can go ahead and test that hypothesis. That's not really a thesis. So no, I don't think I have investment hypotheses. I think I have investment thesis. If I think stock has a certain factor exposure and I want to find out, well, now that's a hypothesis that I'm testing. Sure. After how much of downside will FCX become your first pick? It's going to be hard in a rate cutting cycle to beat where I am right now in some of the positions I'm in right now. What did I say was going to become my the Canadian apartment REITs were my number one conviction, but with them getting close to especially cap rate got to 53, high 53s. Once you start getting 55, 56, you start getting to net asset value. The premiums, the implied volatility kept dropping, and the premium amount kept dropping as well. It's sort of like, well, I still believe long term that they'll perform well, but they're not number one conviction anymore. I got to move that aside and something else moves up the list. I don't know that I would say that FCX would be today in my top 5 in terms of conviction, but in terms of themes, there'd be a top 3 conviction. But some of the themes, there's 5, 6 names in there that I feel that no, these, if I'm going to put more money into something, it's going into these things easily. How often do you trade out of names in your registered accounts? Rarely. We're in the registered accounts, rarely. Sometimes I honestly forget about them. I just completely forget sometimes after I set them up. I rarely trade out of them. Do you hold forever for dividend increases? I wouldn't say forever. For the Canadian apartment REITs in my registered accounts, this is my second round. I did it back in, I think it was late 23. They really took a dump, and I loaded up in my registered accounts, and up they went, and I jumped out. And then they came right back down for, May, June, they were really down. I thought, well, let's do it again. Why not? And they're back up, and I've gotten out of InterRent. Killam, I've now exited. Minto, in the registered accounts, I've exited, but not my taxable. And CapREIT, I'm almost out of in the registered accounts, getting out of those first, because I have other Canadian targets I want to get into in there, and it's almost fully priced, and the dividend yield it's not that great. But at $43, it was so undervalued, it just made sense to do. But I don't normally trade that much in the registered accounts. Sometimes it'll go 2-3 quarters, and I don't even log in to look at them. Do you use Koifin? Sometimes. Will that be an effective tool to find new financial modeling series? Will that be an effective tool for the new financial model series? No. Other tools you'd recommend instead? Others. Yeah, others. You mentioned that banks will do well. Would XLF outperform like XLU? Well, that's a U.S. bank, right? It's a different story there. Would it be better to go directly into specific U.S. banks? Nah, the XLF is okay, but I don't know that I'm as bullish on the U.S. banks as the Canadian banks. Yeah, I don't know. Current economic indicators and messages are mixed. Yes, they are. What business cycle are we actually in? Who knows? I don't know. I don't think it, and honestly, I don't think it matters at this point. Could you do an asset class analysis such as cryptocurrency? Yeah, cryptocurrency, avoid it. There, that took a lot of research, by the way. No, I've thought about cryptocurrency before, and I started doing some reading on it, and it's like technical analysis. I think I can teach it, but I get partway through it, I think this is such bullshit. Oh, this is such bullshit. Oh, this is bullshit, and then I just can't do it anymore because I don't believe in it. I don't believe in it, which means I cannot do it justice because I just don't believe in it. I think it's a beautiful vehicle for criminals. I think it's a gift for criminals. I think it is, if you're going to conduct fraud on any kind of scale at all, you're going to do it in crypto. That's what it's there for. But as far as a serious thing, I couldn't do it justice. Even if there are serious pockets of that market, I couldn't do it justice because it's the idea. Almost all of the assumptions fail It's the idea that um, uh, and I've made these arguments before. The most common one is, well, it's limited. It's not like a currency where the central bank can print and print and print. It's not limited. Every single one is limited, but you can have an unlimited number of limited coins, which means you have an unlimited number of crypto. And look, the internet in the 90s found its way into my life very quickly, very quickly. Cell phones found their way into my life very quickly, very quickly. Spreadsheets, office, productivity tools found their way into my life very, very quickly. Blockchain has been around how long now? And has it found its way into your life? Other than trading the crypto for it, has the blockchain itself found its way into your life in any meaningful way at all? After this many years in the technology space, technology doesn't move this slow. And what we have here is a beautiful solution to a problem that nobody has. And that's blockchain in a nutshell. If we lived in a world where there were no central banks and every bank printed its own currency, crypto would be the solution. Absolutely. Bitcoin would be the solution. But we don't have that. So Bitcoin is 150 years too late in the US to be a solution to any problem that anybody has. So it is a technology looking to be a solution to some problem. And it just, I can see that if I were saying, look, I'm doing this, I'm doing this, I'm doing this. Interactive Brokers is moving all of my options, or SIBO is moving all the options to the blockchain. This is a thing. This is a thing because I know how much options I trade. This is a thing, but that's not going on. My vehicle is not on the blockchain. My health records are not on the blockchain. My tax forms, nothing like that is on the blockchain. If there was some way of moving all of that to the blockchain so that your tax return was done automatically and you didn't have to think about it, that's a thing. Give me a big enough problem that this is the solution for, and I'll be all over it. But you've got, 2,000, 3,000, 4,000 blockchains in the world? And none of them, out of all of those, none of them have found their way into my life in any way whatsoever. Technology just does not move that slow. It's a solution to a problem nobody has except criminals. It's a beautiful solution for fraud. It's a beautiful solution for moving illegal money around. Beautiful solution for that. And honestly, I do think that there is no creator of Bitcoin, whoever wrote that paper. I don't think that's an individual. I think it's a criminal organization that created the blockchain and created Bitcoin for the express purpose of being able to transfer money in plain sight and have it accepted. And I think I just think that they couldn't even be happier. If you want to take down every criminal organization in the world, bring Bitcoin to zero. You would destroy the finances of how many criminal organizations. Take Bitcoin to zero. So any CIA operatives out there that are listening, if you really want to take down a lot of criminal gangs in the world and disrupt a whole bunch of drug trade and gun trade, take crypto to zero. But then again, isn't that a beautiful mechanism that the CIA can use to fund this organization and this organization and that organization? So maybe it was created by a government somewhere to say, listen, let's do our business in plain sight, right? Maybe. It's a little much, eh? Assuming you couldn't do both, would you recommend maxing out registered accounts first? Or would you be into unregistered to be able to utilize options? That would depend on my tax rate and my age, and my anticipated income in retirement. If I anticipate that in retirement I will have the highest tax bracket, I would not put a single penny into any deferred tax account unless I was already in the highest tax bracket. Because I'm not going to put money in that's taxed at 33%, only to pull money out and pay 53% tax on it. Stupid, stupid, stupid. I wouldn't do that. So it really comes down to what tax bracket are you in. You really shouldn't be putting money in your retirement account until you are in the highest tax bracket, because all that money that you could have put in is cumulative, right? So you could shelter a whole bunch of high income or high taxed income at that point. Also, how close are you to retirement? What is your current income? What's going to be your tax rate coming out? If you're putting money in and taking money out at the same tax rate, sure. If you're 6 years to retirement, at that point, it's like, well, if you think tax rates are only going to be higher, and in US and Canada, it's a very real probability is that your tax rates will only be higher going forward, because contrary to monetary theory, you got to pay back all this debt. All of this debt's got to be paid back, and it's got to come from you. I don't care if you want to argue that, well, it transferred money to you, you still got to pay for it. And where they transfer the money to, and not necessarily going to be the same people that got to pay it back, right? Successful people don't get government transfers, but successful people are expected to pay the lion's share of all the taxes. So successful people pay for it in the end. If you're at the bottom, yeah, you love government spending. It's great because I get stuff and I never have to pay tax. I'm not the one that has to pay it back because I don't have the money. So you love government spending. There's so many things that you have to think about in using your tax deferred account. Thoughts on Adobe earnings? I have no thoughts on it. I don't even follow it. Financial modeling applied series. Could you pick one or two companies in each sector and do a business modeling and asset structure analysis? Yeah, that is the ultimate goal. We're going to start with Costco. We're going to do a REIT, a Canadian apartment REIT. So we're going to see US GAAP. We're going to see IFRS. And the big difference between the real estate listed on the balance sheets. Costco's real estate is listed at historical cost less accumulated depreciation. Cap REIT is listed at fair value. So when we look at the valuations and you look at one versus the other, you think, hey, I got to make an adjustment for the fair value of the assets, don't I? But not over here. And then as time goes on, depending on the feedback I get from this one, depending on how people feel about this, I'll do more. Excuse me. The nice thing about doing more is all of your time is spent on the first one because I got to explain everything to you. The second time around, I don't have to explain as much. We can go right in, I don't have to explain why we're collapsing categories. I could just say, these are the ones that were collapsed. These are the ones that were expanded. We're going to forecast out accounts receivable, inventory, and accounts payable using days outstanding. You'll understand what that means already because you've already been through it. I don't have to lay out the whole case for it each time. So each one after that will go faster. So yeah, the goal is to do more. Just so that you understand about the applied level, the real world never ends. The real world never turns off. It keeps going and it changes. The flavor of the economy changes. The flavor of the market changes with every cycle. It's a different thing. There is a different feeling, different groups of winners, different stories that come along, which means the applied series never ends, and it will never end. It will continue to go on and on and on. And even after I'm done with it, I'm already looking for key people that can step into certain parts even after I say, okay, well, it's been 15 years. I'm 70 now. I'd like to, maybe go somewhere for a while and not have to do this anymore. It will continue on. It will just continue on. and the people that I'm looking for are in the CFA family, because it really is for that community. It really is meant to be the completion of your CFA content. That once you get through the book stuff, once you get through studying CFA or studying finance, it's now time to practice finance. That's the whole concept of the applied level, is that how do I get real world experience if I can't get a job? This is real world experience. You're going to think like an asset manager. You're going to think like an analyst. You're going to think like an investor. You're going to jump in the pool and you're going to get wet. It doesn't end. So am I going to add more? Yeah. Yeah. Is it a good time to rotate into XLF, or did I miss this train? No, you never miss the train. You never miss the train. Rate cuts have not even started yet. So I don't think you've missed the train for getting into XLF. Any prereq to your applied level? Not really, no. New to investing and learning fundamental analysis and wondering if it will be too advanced for a person like me. Don't really know enough about you. Your username is Silver Fox, so I imagine you're in around my age, because I've got silver as well, and I've been told I'm kind of a fox. So I would say the one stumbling block later in life is switching your thinking, is thinking in a different way, because you spent your whole life thinking that, well, investing is this. You do these are the things you look for in investing. And I'm pretty sure that if you go through the modules, I'm pretty sure you'll realize that I'm doing this in a very different way. I'm not managing or showing you how to manage a portfolio of return. That's the wrong way to think about investing. You're not managing your return. Your return will be what your return will be. You are managing a portfolio of risk. And if you manage risk well, return shows up. It shows up. Let me give you an analogy to this, and we'll talk about my weight loss. I don't know if some of you have noticed that I am thinner. Today on the scale, I am under 223. I haven't been there for 10 years. I tried everything. 3 summers ago, I got all the way up to 249. I put a gym in my basement very quickly, and I got down to mid 230s, and that's where I stayed no matter what I did. Be on the treadmill, do the stairs. I bought a bike. I got an elliptical. I got a full cardio room. I got everything here. You're 2 hours a day in the cardio room. You're an hour a day in the gym, and your weight is not budging. I'd get down to about 228 and nothing, and bounce right back up. In fact, even at 228, there are some nights where, I'm like this, where I'm so deficit on sugar that I need something. So it was, in managing my weight became very difficult. And I really thought, I need to hire a dietitian. I need to hire a personal trainer. I got to figure this out. Or I have to get comfortable with living 10 years less, because there are no 230-pound 90-year-olds. They don't exist, because your heart gives out well before you hit 90 if you got to carry that much weight around. Or you're more susceptible to falls, and for older people, that is a bad thing, because you get a lot of internal issues with that. Leonard Cohen died falling down the stairs. He fell downstairs. He had a fall, and then he died. I mean, this is what happens, right? I mean, but he wasn't heavy. But I'm getting off my. I feel like Trump, and he died. He was a good man. We all love Trump. We all love him. So either I get comfortable with taking 10 years off my life, or I solve this problem. Well, everybody I found that was a dietitian or a personal trainer wanted to do the online sessions. Let's just do it online. It's $120. We'll give you a 30-minute session. It's like, I know what I'm going to find. The majority of people you meet out there in their jobs are average. They're average people doing average things. And I'm going to get what I could find on any Google search on anything. And then I thought I need to think about this differently because this is not working. So I did. I did a lot of research. I figured I can analyze a stock. Why the hell can't I do this? Why can't I break this down? Um, and it comes down to one thing. I was managing the wrong thing. I was managing my weight by managing the calorie intake and that keeping the calories low. And that's what made me crash is you're keeping your calories low and you're expending a lot of energy, but your body's not losing any weight. Something is wrong here. It's because I was managing the wrong thing. And I'll tell you what I was managing in a second. Let's just jump back to the applied level. So when you start, you'll find that the focus is not on return, it's on risk. Manage risk, return takes care of itself. Well, for weight loss, don't manage your calories, don't manage your weight. It's one thing and one thing only, and it has made all the difference. And if you subscribe now, I'll tell you what it is. Don't you? It feels like an infomercial, right? No, but wait, that's not all. Insulin, manage your insulin level. So what you do is you look at, well, what spikes your insulin level? Carbs. Right away, carbs are gone because that spikes your insulin level. Have a look at all the food you eat in terms of its glycemic index content. And if you have anything in the high level, move it down to the mid. If you have anything in the mid, move it down to the low, or just move the high to the low. Anything that's mid, try to move it down. So there goes cherries, there goes pineapple, income berries, income cantaloupe. You can have as much meat as you want. Red meat doesn't spike your insulin level. You would think, but it has a high fat content, but it doesn't spike your insulin level. So here's what happens when you bring your insulin levels down. With high insulin levels, when you burn calories, you're going to burn calories from your sugar stores, from glycogen stores. You're not even burning fat at that point. So when I was doing all of that cardio work, I was burning sugars. That's all I was burning. I wasn't even burning fat. That's why my weight wasn't even budging, because my insulin levels were too high. Because while I was watching the calories that I eat, I was getting my calories from the wrong stuff. Do you get that? It's not just a matter of lower your calories. It's you got to have different calories. So there go carbs. There goes glucose. Glucose is gone. Fructose, okay, because you get that in fruit. Glucose, gone. And then it takes about 30 days for your body to stop when you're going into calorie deficit, to stop burning glycogen and start burning fat. It takes about 30 days. So I've been at this 3 months. And my goal was 1 pound a week. I'm at 1 pound a week right now. I went from 235 down to below 223 now the 15th will be exactly 3 months that I've been doing this. So it turns out, just in doing this little research and doing all of my own things, I end up at the Atkins diet. Not the keto diet, but the Atkins diet, because everything that I look at, I go, I'm doing the Atkins diet. Why didn't somebody just tell me, hey, you should do the Atkins diet? But the science behind it is the insulin. So now I do not manage my calories. I do not manage my weight. I manage my insulin levels and I lose weight. It's the same thing in the market. If you chase return, if you chase momentum, you won't get it. You're doing the wrong thing because you're ignoring risk at that point. So my big focus is learn to manage risk. Build a portfolio of risk. Always watch your risk levels. You can increase your risk levels, decrease your risk levels, whatever you want. The return will take care of itself. Much like if you want to lose weight, manage your insulin levels. By the way, that's what Ozempic does. That's what Ozempic does in a pill. Ozempic has been around for quite some time, mostly for diabetics. But now it's a weight loss pill because it does do exactly that. It lowers your insulin levels and it turns your body from a sugar burning biological unit to a fat burning biological unit. Now I don't have to worry about the calories that I take in. As long as my calories don't come from glucose or carbs, I'm okay. Now I can't take in 3,000 calories a day. But as long as my insulin levels don't go up, no matter what I take in, my body now burns fat, not glycogen, not glucose, not the glycogen stores. So that is a nice analogy to what the applied level will do. for you is it will teach you to create a portfolio of risk profiles and manage risk, and return will just take care of itself. That was a long explanation, wasn't it? But there it is. In terms of domain knowledge in finance and programming skill, which one do you think is more important to be successful, become a self-employed trader? Finance, domain knowledge in finance. Programming skills is a productivity tool. It is not a wealth creating tool. It's a productivity tool. What's the story behind the gaming chair? I guess gamers do use this chair. You do see it a lot with gamers, and the reason why is because it's just got great support. You can sit in it for hours and do work. It's designed to be sat in. Some office chairs, you sit in them for a couple of days and it's like, okay, I'm always leaning forward. It doesn't have the right support. It looks nice, but it's not really great. It was just I needed a new chair because this one here, I don't know if you hear it, it's starting to wobble side to side, and this one here has got maybe a couple of months left on it, and then I'm gonna have to get a new chair. By the way, I tried to find this exact chair again. They don't make it anymore, but I can get it out of China if I buy a container load. And it's $90 a chair. I got to buy 245 of these things, which I don't need 245. I would own 5, but certainly not 245. And I could get this chair. Just seemed like a lot of money to spend to get a chair, but I could get it if I bought a container load. 90 US, which is about, I don't know, 130 bucks Canadian. I paid 300 and something for this at Staples. So the markup is incredible on that, right? Where are we? How great of an effect have algorithms had on confirmation bias? The more pro Tesla videos you see on TikTok, the more you will get and create bias. Oh, I see. Well, it is an echo chamber, right? What it tries to do is it tries to give you more of what it thinks you like. How it determines what you like is what you search for. The more you search for something, the more you're going to get that. So if you want a good selection of finance videos, start searching for finance videos and just keep searching for finance videos. YouTube will keep giving you more and more finance videos, things that maybe you haven't seen. The more you search for, pro Tesla or pro Trump or anything that you search for, then every time you go back to YouTube is an algorithm that doesn't have any. It doesn't have a conscience or a moral center. It's just code. It just says, "Hey, you've looked for all of these things in the past. You must like these things. Here you go. Here's more of this stuff." Right? And that's all it does. So if you want to hear that you're right, YouTube will support you in that, because you will only look for those things that you listen to where you go, yeah. Well, YouTube thinks you want more of that stuff. It doesn't make any value judgment on what you're doing. It just says, we sell advertising. We need you engaged if we want to sell more advertising. We keep you engaged by giving you what you like. And what you like is, but guess what you search for? So here you go, right? I don't know that. I mean, you already have a lot of concern about that, about these places that become echo chambers. Facebook got into a lot of trouble with that because they started serving you stuff that increased engagement, and what increased engagement was outrage. So if you were outraged, they served you more of the stuff that made you outraged. So it is, understand that these companies, none of these companies have your best interest in mind. You're just a wallet, right? You're just part of market share. And when they have you, The next thing you are is wallet share. You're not a person with hopes and dreams. You're not a person with feeling. You're not a person. Um, they couldn't give a shit about you one way or the other. All they want to know is what is it that we do that makes you spend more money. That's all. That's all it is, or makes you stay online longer. Um, that's all it is. Don't look to them or these companies to care about you. They don't care about you. They care about your spend. That's all. I'm pretty sure that's a Lululemon shirt, and I approve of it. It is a Lululemon shirt. I went shopping, and somebody said, I seem to have a white little spot here. I don't know where it is. I went shopping, and somebody said, Lululemon. I said, no, no, get out of here. Just try it. Just try it. And fine, I'll try it, just to stop it from going on. But I was dead set against going in that store to begin with because I think it's a girl's store, right? But they have a men's selection, and I tried on the shirt, and I thought, this is nice. So now I think I have 4 or 5 shirts from Lululemon. So now when I go to the mall, I think, let's go see what Lululemon has. So yes, it is a Lululemon shirt, and it's comfortable, and I was actually pleasantly surprised. So if you're in the mall and you see Lululemon and you're looking for a shirt and you think, I'm not going in there, I'm going to say to you what was said to me: just try it. Just try it. That's all. Just try it, and you'll like it. It's so comfortable and it fits so well. I like it. Yes, it is a Lululemon shirt. Good call. How long does it take for you to get consistent earnings in the capital market? That's a good question. Took me years to get to consistency, because it took me years to learn things, because I didn't have mentors sitting beside me. I didn't go up through any organization where I could benefit from not making mistakes, or not making some common mistakes, by having somebody beside me slap my hand and say, what the hell are you doing? You don't do it that way. I didn't have that. So you got to figure it all out yourself. Luckily, I was at least smart enough to look at my mistakes and learn from them. I had the ability to at least do that, be introspective. It depends, on who's going to guide you through the market. If you're going to do it on your own, it's going to be expensive, because you're going to have to pay the tuition of life, and it's expensive. If you have somebody that can guide you through it, that can stop you from making stupid mistakes, well, then the tuition gets cheaper. It doesn't mean you're going to consistently earn, but you're not going to make as many stupid mistakes. You're not going to have to figure it out all on your own. So consistently to stand on your own, 10 years, I think, unless you focus on a particular sector. Then I'd say probably 5 years. Your opinion on taking a life insurance policy as an agent who is a relative of mine. Well, let me back that up. Taking a life insurance policy as an agent who is a relative of mine is pushing. Oh, I see. You have a relative who's an insurance agent who is telling you that you should take a life insurance policy. Okay. So at that point, assess your life. Are you a high income earner? Do you have a wife and do you have kids? If you have that, then some kind of life insurance would seem to make sense, especially if your wife doesn't work and your kids are young, because what are they going to do if they lose the big income earner? If you're single, if you have no kids, and you're a middle income earner, what the hell do you need life insurance for? Who is relying on your income that if it disappeared, you'd have to replace it, right? So at that point, it would be like, well, look, no one's relying on me. If you are independently wealthy and very wealthy, what do you need life insurance for? A life insurance, actually, let me back that up. Let me take that back. Life insurance does have a benefit if you're extremely wealthy, because you can buy a very expensive policy and name somebody as a beneficiary, that if you name them in the will might get challenged. But through life insurance, you pay the life insurance company for the life insurance. You'll eventually pay what they're going to pay out if you live long enough. Um, but the assets don't belong to you anymore. The assets belong to the insurance company. So when you die, that person gets the payout from the insurance company, which was your money. The thing is, it bypasses probate, and it can't be challenged in court, and the payout happens faster than probate can settle. So there is one thing that you can do for life insurance. It's also useful if you have a business, a private business, and there's going to be a significant estate tax on your death, and your heirs may have to liquidate part of the business to meet the tax bill. Having an insurance policy that pays out to meet the tax bill also makes sense. So maybe I was a little harsh on life insurance there. Any plans to get a new pup? Not yet. Yeah, it's something I'm gonna do at some point, but not yet. Not yet. I tried, got one, and it got sick. It had blood in its stool all week long. Brought it back. I got it from a breeder and emailed the breeder saying it's a little early to be incurring vet bills. I mean, it's bleeding internally somewhere along the way. It's got blood in its stool all the time, and it had ticks on it. I know it didn't come from me. I have fake grass, so I took it back, and they just said we're just going to refund your money. So I guess okay. What advice would you give to a trader who is just starting? Be humble, right? Be humble, and find a style that works for you, and keep your sizes small. Live small for the first little while. Don't be a hero. Don't swing for the fences, because everybody who swings for the fences does strike out a lot. Don't swing for the fences. Just be humble, be small until you get enough experience to get bigger. For Intel, in today's valuations, would this be a good target for being acquired? Acquired? No. I think they're more likely to sell off their foundry business, but not be acquired. Who would acquire them and why? Sat for level 3. It started applied series this week. What's the best sequence for the course? There is no best sequence for the course. Should I start with portfolio management and sector studies? I don't think it matters. Bounce around. That's the whole point. There is no you got to know this before you know that. You'll just bounce around. There is no sequence. General pathway to become a successful self-employed trader. So I feel overwhelmed with the financial knowledge, your applied series, and Python coding skills, learning, etc. I don't know that there's a pathway. It's like a web, more than anything. Yeah, a pathway implies like some progression. You need this before this, before this, before this, and this is more like a web. It's like a whole bunch of things, and then they begin to interact with each other. So I don't know about a general pathway. There are some good habits and bad habits. It's about it. Keep your eye on risk. Like I said earlier, you're not in the business of return. You're in the business of risk. Manage your risk. Always think about the risk that you're taking on and what you're getting paid for that risk. And always be prepared to either increase or decrease your risk exposure depending on what the market is telling you. But I don't know that I would say you got to do this first, then you got to do this, and you got to do this, and it's make sure you learn from your mistakes. If you find yourself repeating the same mistakes again and again, it's because you're not learning from your mistakes. I live in Canada. Is Canadian stock market worth investing, or should I focus on the US? I mean, I buy Canadian stocks here and there, but as far as being a Canadian investor, as far as having a home country bias, you can't accuse me of that. I am predominantly American in my investing, predominantly American. How do you record your trading journals every day? Do you use Excel or other software to help you track your everyday trading plan and P&L? Lots of times it's just sheets of paper like this, just sheets of paper where once I do something, I cross something out, I'll write something else. And then the next day I'll look at what's left on that sheet. I'll move it over to the next thing. About 9:15, I look at the market and I just have a blank piece of paper and I just start writing down tickers and strike prices. Think, okay, this one I would like at this price. Let's look at this. Okay, this one, it looks good. This one looks good. Let's add these two. How are those looking? No, I don't like those. Get rid of those. And right around 9:15, I start thinking about what I would want to do that day if we had a big enough sell-off. By about 10:15, you look at the market because it's on the other screen and go, okay, well, we're not selling off. Okay, I'm good. Usually there's very little I need to do on days like that. I do my buying when the screens are red, and I'll do my selling when the screens are green. In other words, it's gone up, it's gone up, it's gone up, and I think something's played out. Now's the time to sell. Sort of the other way, people sell when they see red, they buy when they see green. I do the opposite. So I don't really keep trading journals every day. I don't really learn a lot of new lessons anymore, thank God. I mean, there was a period of time where, you keep learning new lessons. Like, I'm so tired of learning new lessons because it costs me money every time I learn a new lesson. When am I done learning the new lessons? I'm sick of this. Once you find a strategy, once you stick with a strategy that works for you, once you become a particular type of trader, whether it's a value trader, a growth trader, a swing trader, whatever it is, when you find your home and you stick with your knitting, you're done learning new lessons. All right. The losses, whenever I have lost in the past, it's usually because I break my own rules, or it's because I decide to get into something I don't really understand. And if you don't understand it, you won't know when to get out. Are you long TLT? Yes, I am. Did you just get a haircut? No, I got it a while back in August. My next haircut is September 16th. I think I got anything I got to pay attention to here? Nothing I got to pay attention to. September 16th is my next haircut. And then September 19th, back in Costa Rica. Has copper returned to interesting enough levels, especially with the cuts by Goldman Sachs on targets? It's holding at around the $4 level right now, which is around the $10,000 price. It's holding around there. VIX futures are down 0.46% tonight. Could be. Let's see where we are. What time is it anyways? 9:13. You can't tell much at night here. Peso flat. The yen weaker. The Canadian stronger. And futures are up now 11 points. I mean, we were down to 54.02 at one point. We're at 54.30. And we are now moving up. So it would make sense that VIX futures would be down, moving up. Platinum is up. Gold is up. Where's copper? Copper, call it up 0.15%. Palladium is up 1.5%. Platinum's up 1.6%. Those are ignored a lot. Energy, Brent's up 90 cents. West Texas up 95 cents. I don't know. Last week didn't really have a catalyst other than some profit taking, and who knows. But listen, I've learned in the last couple of years that you just can't tell much with futures the night before. You pretty much got to get up at, once you get to 6:37, once the Americans start showing up, then you get some idea of what you can expect. But right now, it's like, I don't know what to expect. 5 most important factors to be successful in earning consistent earnings in capital market. Discipline, which means you have rules and you stick with your rules. No matter what happens, you stick with your rules. Discipline's a big one. Education, continual education, continually, never stop. Do your research, right? Like, this is part of having a rule. Rule is don't get into anything you don't understand. You see a company that's down 15% and you hear people on Bloomberg saying, it's a little overdone. It's a little, don't just go buying it. Just because you hear somebody saying it's a little overdone and it's down a lot and you think you're getting a deal. Those things rarely bounce back up. Rarely. Do your own research. I don't know that I can think of 5. Do you think rate cuts are already priced in the financial sector stocks? If they're in the Fed fund futures, anybody can see that they're there, which means it's not hidden news. It's not like you're learning something the market doesn't know. It's not like you're seeing some kind of futures curve that only you can see, the whole market can see. Is it priced in? I don't know, but what you can say is that it's known. It's information that's known, so sure, it's in the price if it's known. U.S. debt is unsustainable. Is there an alternative country that can replace its dominating position worldwide? Not really, no. If U.S. debt becomes undesirable, where can money go? That's a good question. If there was an alternative, it would be nice, because if there was an alternative, that would discipline the U.S. a little bit more. But because there's no alternative, there is this privilege in the U.S. that where are you going to go? We don't have to manage our debt because where are you going to go? Right? We're still the best, even though it looks bad. We're still the best. What to do? I'm stuck. What to do? I'm stuck. Don't know how to improve. Subscribe. I don't know what that means. What do you make of the Fed's balance sheet? It's coming down. I mean, I don't make anything of it. It is coming down. Reverse repo is probably before the end of this year going to hit 0, which will then start to take down the reserves. Once reserves start getting to 2.7, 2.6, 2.5, I think you'll see the Fed really start to slow down the balance sheet runoff, and maybe even cancel balance sheet runoff. Say we're not going to let anything run off anymore. Let's see. How to keep calm when facing market volatility. I don't keep calm with volatility. I get excited. I see red on the screen. I'm like, okay, what's on sale today? Because I get to buy stuff cheaper, and I don't mind holding good, solid companies. When the screen is all red, if there's no big catalyst, like a nuclear bomb went off somewhere, if there's no big catalyst or a significant organization declared bankruptcy out of nowhere and no one saw this coming, well, what else do we not know? Where are the rest of the landmines? If there's nothing like that going on, if it's just exhaustion or profit taking or maybe a correction, hold the course. Look at these things as an opportunity to buy things that are on sale. With interest rates this high, you should have been sitting on a nice cash balance anyways. It would have made no sense to be fully invested at 22 times forward earnings and a cash rate of 5.5% to say, no, I don't want any of that stuff. Give me this stuff. If you were fully invested, well, then that's not such a good deal. If you were invested in, all the headline names, NVIDIA, Tesla, all these big names that have been up big time, thinking that, they'll just keep going to the moon. Well, probably over. on that one. There's a good chance it's over on that one. I don't know. That would be my bet. But if you're in good, solid companies with good dividends and good options, pullbacks are a great opportunity to buy stuff. Great opportunity. So I'm usually quite calm in market volatility. I welcome it. The days where the market goes up is like, I should have bought more of this. I should have bought more of that. But I much prefer blood on the screen everywhere for 3 days straight than green on the screen everywhere for 3 days straight. Because green can only reward me for what I have. But red allows me to get more things on which I will then eventually be rewarded on. Red is much better for my return down the road than a bunch of green days. Your net worth. I don't know. It is high enough for me not to know. From day to day, I don't know. I have an idea of a ballpark of where it is, but from day to day, I don't know. So I don't worry about it. Anybody who can count it, probably is very worried about it. It is far more than I'll ever need. So I honestly, I don't know. It would all, because to know it would require me to value some things that are illiquid. So, depending on how I feel about something, maybe it's more, maybe it's less. I don't know. But it is significant. I've heard an argument that because the U.S. is a reserve currency, it has to have a current account deficit to continue to export U.S. to the world. Do you agree? It's an argument. I don't know. I don't know that I would say that was true. Because you can always swap for USD. You can always buy USD directly. You can always buy assets. There's a bunch of things you can do. I don't know that I would conclude that. I would say it certainly facilitates it, in some degree. It makes it easier in some degree. It makes it not even easier. It makes it, and when you're the largest economy and you are running a current account deficit, it makes it inevitable almost that you will get reserve currency status, because other countries got to do something with the US dollars they get, right? I meant to ask, I've been trading different markets for 8 years with my own money, but still failed to consistently outperform the market. There's nowhere near enough information in there for me to answer that. If you're failing to outperform a market, you've been doing it for 8 years, you might want to consider just switching to passive holding, and at least you would get the market, right? Just be passive and spend your time doing other things. Maybe this is not your thing, right? Or maybe you just have too many bad habits that after 8 years might be hard to break you from. But if you're not outperforming the market, do something else and let your money, invest your money passively. You'll at least get the market, right? But I mean, I don't know what you're doing to be able to have an opinion. I'd have to know a hell of a lot more than a statement like that. Why is U.S. government threatening to block Nippon Steel deal and U.S. Steel? They want the union vote, right? Union vote, union vote, union. There's more union workers than management, so who the hell cares about management, right? They want the union vote. Even though U.S. Steel is saying, look, you want to protect union jobs, let this thing go through because, we need it. That doesn't win votes. It doesn't win votes. It's all about winning votes. Listen, Much like corporations, your politicians care little about you. The ones that are running in these popularity contests care little about you. They'll say what they need to say to get elected. And if they think that if they say, oh, we'll block the deal and they'll get the backing of the union and all the union votes to get elected, they'll say it. They'll say it. They'll say it. Whether they believe it or not, they'll say whatever they have to say to get your vote. These are dirtballs. They're scumbags. They lie as a matter of, all politicians lie. All politicians lie. So we can't really hold their feet to the fire for lying. It's, some are far more willing to lie than others, but for votes, they all lie. They all lie. They all lie. And they say stupid things because they think you're stupid. Not because they're stupid. They think you're stupid. So they say things like that. It's all about, what's going to get the vote. That's all. What's going to get the vote. But they're not, yeah. I don't even know why we give politicians any kind of airtime at all. I don't know why we don't hold them to a higher standard. I think, in the end, you get the politicians you deserve. And what have we got? We get exactly what we deserve, because we no longer think of it as a job interview. We think of it as a popularity contest. And so we get the politicians we deserve, which isn't much. It just isn't much at all. Can you explain the rationale for your synthetic XLU utilities? And I didn't want US dollar exposure for that one. And I didn't want to have to spend, I didn't want the withholding on the dividend, and I didn't want to have to spend that much money getting the position. So the synthetic, it makes perfect sense to do. What's the benefit compared to holding the underlying? No withholding on the dividend, no currency exposure except for the gain that you're in. 30% of the capital being used as opposed to 100% of the capital. The synthetic is a winner all the way around. What do you think of practicing? Oh, I lost that one. Where'd it go? Sometimes this chat brings me all the way down to the bottom. Practicing drawdown management when market is so volatile that stop losses frequently triggered. Large range of trailing stop losses is not feasible as well. Stop loss triggered. I don't use stop losses. I plan to stay in something for a period of time, but I get it. That's me. You might say, well, look, how can you ignore, something like Tesla? It goes up. It goes up. I just don't want it to go all the way down. So I'll put a stop loss in. I would say that if you play that kind of game with stop losses, you might want to think about buying calls instead of buying stock. Just buy the call. The most you can lose is what you paid for the stock. You have a built-in stop loss right away. If you buy a call for, on a $200 stock and you pay $10, the most you can lose is $10. That's the most you can lose. And as the stock price drops, the delta of the call drops, which means that you lose less and less and less and less for each dollar down. So you have that convexity in the option. And if you buy them out in enough time, let's say you buy 1 year, you buy leaps, and the stock pulls back, it's like, so what? The most I can lose is what I paid. And if it starts going up, I'll get my money back. You don't have to worry about drawdown management if you're buying calls. So if your strategy is such that every time the market turns down, you get stopped out of everything, you might want to switch to buying calls instead of buying the stock. Buying calls works better in lower interest rates, and we are going to get lower interest rates. So that becomes a desirable thing to do. It's a built-in stop loss because all you can lose is what you paid. It's a built-in stop loss that doesn't knock you out of the market. If you're willing to lose, you pay $10 a stock. So on a $200 stock, you'll pay $1,000 for the call, and you're long 100 shares. You'll basically be, it's in essence long 100 shares, and you only spend $1,000 instead of $20,000, right? And if the market drops, well, it doesn't knock you out. It doesn't knock you out at 190 only to watch it run back up to 220, because you don't have to get knocked out of the call. You have no margin. You're not going to get called, and you were willing to lose $10 anyways. Just buy the call. Do you think rate cuts are already priced in? I already read that. Completed CFA, subscriber to the Applied series, learned from all imaginable sources, no options. Well, great. This is continuing on from still underperforming the market. Again, I would have to, there's something in your style that's off then. Howard Marks, yeah, has an upcoming group of risk videos on Oaktree YouTube next week, I believe. Just wanted you to, great. I like his stuff. Where's the financial modeling course in the applied level? It will be up tomorrow. It's only September 8th. It starts September 9th. When you said you have external managed portfolio, do you mind telling us, JP Morgan? Advice for waiting period to receive advice for the waiting period to receive level 1 results. Well, what do you want to do? Do you want to move on to level 2? Take one of the sections for level 2 and start now. You can start on level 2 now. Or, if you're not going to write level 2, well, level 2, you can't do till May. You got time. I'd sit back and relax. Take some time off. Just wanted to find out if I buy the whole thing, applied level, I get access to the new courses like the one automatically, like that one automatic. Financial modeling. Yeah, you'll get access to that. Your opinion about day trading. I don't think it's a strategy. I think it's a tool. And is it possible to be extremely profitable? Nope. Well, possible? Sure. Anything is possible. Probable? Not really. 95% of day traders lose all their money in 90 days. It's called day fading for a reason, because you eventually fade away. Nobody knows what's going to happen in the next hour. Nobody knows. You're gambling. You're just gambling. Go to the casino. At least with poker and blackjack, there is some strategy. But if you're just, chasing nickels and dimes around the board, no, it's nothing I would do. And I did it years and years and years ago. And I tried to find all sorts of ways. And you got to screen up with all these technical indicators. That's all bullshit. All those you flip a coin. If you're in a bull market, 90% of stocks go up. So you could just grab 10 tickers at random, 9 will win. It was just a bunch of nonsense from day to day. I don't see it as anything viable long term. Not only that, you're making the most tax inefficient earnings, because everything you earn is income. And you'll be classified as a pattern day trader. And if you're classified as a pattern day trader, you have no dividends, you have no capital gains. Every penny you make is income, and you're taxed at your income tax rate. It's the most inefficient form of taxes. So on a risk-adjusted after-tax basis, it sucks if you even survive. And there's a 95% probability that you won't survive. How's that sound? Would love to get an update to reply to Tesla valuation. Ice Age is far from over. Videos, EV environment is worse, but wondering with majors pulling back if Tesla will be able to sell more credits. No. It's the amount. All you have to do is look at their market share in every market they're in. Their market share is decreasing, even though they're not selling less and less and less. Although some quarters they are. It's because the mountain of all the competitors are selling more and more and more. No one single competitor may be selling a lot, but everyone has pulled up a chair to Tesla's table. Everyone has pulled up a chair. And there's another table in the room for robotaxi, of which Tesla's not even sitting at. In their own backyard, you can call it another picnic table in Tesla's own backyard, and they don't even have a seat at that table. So no, I honestly think they are a $30 to $40 stock at this point, and I think that if you're going to give them an interesting valuation, you might value them at 40 billion on the car company. You might value them at 15 billion. Give them a 3x sales multiple on the battery. You get to 55 billion. I wouldn't give them anything for robotaxi because it's just a pipe dream. Uber will be the robotaxi platform, not Tesla. Uber will be the platform. A million robots in homes by the end of 2025, fully programmable. And now, what was the latest thing? He's rolling out plans to colonize Mars. Enough of this. And over the weekend, there's a story of which he denied, but a story about XAI providing the software for FSD and getting half of the revenue from Tesla for it. And then he wants Tesla to invest $5 billion in this. This is just a whole bunch of governance issues going on in this company. Give it a $40 price target, and I think you're probably in the game. I don't know that I would follow it up with another deep dive on the sector like that. I think people keep asking for your opinion on the business cycle because those folks are probably trying to sector rotate. Yeah, could be. You said there are better trades allocations to do. Yeah, it's if you're trying to sector rotate right now, I think the only thing to pay attention to is the interest rate cycle. Utilities, good REITs, and banks right now are the thing. I'd rather have your fundamental wisdom over their hotkey knowledge. Yeah, well, see, same with me. Interested in gold miners, but I'm concerned with high capex given they're motivated to increase production at this high level of gold prices. Well, you need high levels of gold prices to encourage capex. Otherwise, you get none. The yield per ton has been decreasing over years. It has been decreasing. So gold miners have to mine more and more and more tons of ore to get the same amount of gold. If demand, especially from central banks and from jewelry, if that holds up, demand will outstrip supply. The price would have to go up to bring more gold online because there are reserves and there are resources. Reserves are commercially viable. Resources are not commercially viable. They're technically viable because, yeah, there's gold there, but at this price, it's not worth mining. That you'd have to get the price up significantly higher to bring that on to meet growing demand. Struggle with reading research papers in finance. Since you're a PhD, could you please share any tips of how to read research papers quickly and effectively? Quickly and effectively. What are you reading them for? And who wrote them? If you're reading academic papers, I'm going to say this very nicely: don't waste your freaking time. Most of those papers are motivated by the need to publish something. The amount of papers that are published with faulty methodologies, 50, 60, 70% of them are faulty. Yeah, probably. I wouldn't waste my time. I don't read academic papers at all. Period. It is truly just a waste of time. 90% of those papers, 95%, if not 99%, exist for no other reason than the person needed to publish something. Anything. Dear God, anything. I need tenure. I got to publish or perish. So you're not interested in truth. You're interested in publication. Truth is something you do when you're fully tenured. I read abstracts and conclusions. Everything's in the abstract, and then you can go right to the conclusions for implications. Couldn't care less about the lit review. The lit review is the same everywhere you go. There's research on this and there's research on that. The researchers haven't done a lot with this, and there's a lack of research on this and this variable. So you gotta, in your opening thing, it's this is the hole in the literature I'm filling. And then you go through the research, and so and so and so and so and so and so have found this in this context, and so and so and so and so found this in that context. But researchers have been, absent in this particular thing. And then you go into your methodology and blah 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 blah. Here's what I'm going to do, and here's what I did. And you know what? Before you even wrote the paper, they already went through the data set and already found what they wanted to find. You do not spend any time in academics writing a paper if you don't already know the results. It is not honest research. It is, you got to publish. You can't take the chance of not of here's my thinking, here's my hypothesis, is grand theory. I think there's something here, and if the answer is right, this could be groundbreaking. Go to the data. No, no, no. There's nothing here. Well, you just wasted 6 months of your time. Tick tock, tick tock, tick tock, tick tock. There's the 10-year clock ticking. Tick, 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 tick. You can't take the chance. You can't take the chance. You run your data first. You find something and you say, okay, let me go look for a theory. Now let me go look for a hole in the literature. And that's where my paper is going to go. Waste of time. You can look at, there's a citation database for academic papers. And if you take any journal, even the King Journal of Finance, and you go back 8 years and you take only one edition and say there's 6 papers in that thing, and you look up the citations for those 6 papers, I'd be surprised if they have any citations. Published for nobody to read, nobody cites it, no impact. That's the majority of academic research. You have to be prepared to be to have zero impact in the world for the most part. This is most of the researchers, zero impact. And if you're comfortable living a life of zero impact, academics just might be for you, especially if you're not a very good professor, because universities don't hire professors, they hire researchers, right? So I wouldn't read a lot of research papers in finance. I would rather listen to a practitioner telling me a story than have the 5 best finance journals in my inbox free every year. I would rather listen to a practitioner talk, hands down by a country mile. Do you have a trade journal? No. Or do you sort of prefer to move onward without analytic scrutiny that you document? I'm well past that at this point. If I were just getting my sea legs, then yeah, I would probably want to document what I'm doing so that I could understand why did I go into this trade? What was my thesis? What was my trade plan? How do I know the trade is done? Did I get lucky? I'd want to know how much of my return did I get lucky. I bought this at 30. I thought it would go to 35 in 6 months. It went to 42 in 2 months. Kind of got lucky on that, right? It went way more than I thought, way faster than I thought. Maybe I was that good, but sometimes you just got to chalk a few things up to luck. I'm past that now because I can mentally think things out without having to write them down. And being that I stick with a particular style, I don't know that there's many new lessons I need to learn. Am I right that high capex will put pressure on ROIC in the coming quarters? Well, it depends on what the capex is for and how long the payoff on capex will be. I think a lot of capex into AI models is probably not going to have a payoff for 4 or 5 years. And since that is now invested capital, Yeah, you might have a hit. But it depends on what the invested capital is for. I mean, if you're a store and you're opening up new stores at a rate of 60, 70 a year, and you're generating revenue on those stores comparable to a comparable rate within 6 months, then no, the ROIC should increase because you're spreading your fixed costs out. Um, I'd have to know, well, what's the capex for, first of all, and what is the lead time on the spending of the capex to the initial cash flow that comes from it. 25 years old, and I'll be sitting for CFA level 1 November. And if I clear, I plan to sit for level 2 in May. Okay. Before I start searching for a job, what do you think of this? Sure. I don't think I have a thought either way on that. If you don't have a job, it's not as if you're sacrificing, your growth in your first few years on the job for this. You don't have a job anyways. You may as well do something. Sure. You mentioned disruption happening in the education field in the past. I also recently came on a study stating that a shortage of professors is inevitable in the West. I don't know what the acceptance and graduation rates of PhD programs are, but you would need a stream of PhDs coming online, and if we think that the post-secondary education market is growing, you'd have to have a growing number of PhDs coming online. But you also, more now than ever, PhDs, universities are in competition for PhDs with the private sector. Never really used to be the case that if you were going through for a PhD, you were either going into a research role at an organization, at least in the sciences, or you were going to a university. But now that doesn't necessarily, it's not necessarily the case. So it could be. But the university model, I think, is long dead. It's due for an upgrade. It is a 1,000-year-old business model that I think has to go away. It needs significant change, because they're not in the business of education. As odd as that sounds, a university is not in the business of education at all. Education is just something it does. It's in the business of certification. You go to university to get a degree, not an education. It's still the degree. If you can go to university and not get a degree, you could just audit all the courses. You don't have to take them for credit. You can audit all the courses. Nobody does that. Nobody goes to university and audits all the courses. You go to university for the degree, and you go to particular schools because you want the degree from that school. The more prestigious the school, the more expensive the degree, but not necessarily the better the education. When you look at the top 25 schools, I doubt if the variation between number 25 and number 21 and number 1 in terms of the quality of education is very different at all. But in prestige, they are. Universities are in the business of credentialing. Does it really take 4 years to credential someone? If you recognize you're in the business of credentialing, couldn't you design a program that could credential them in 3 years or 2 years? Couldn't you do that? And then you'd get more throughput, perhaps. So, being that they're not in the business of education, I think that you need maybe 100 serious universities in the US. The rest of them can all disappear. We have 3,500. The rest of them can all disappear or move online or have one big giant online university. with a solid audit process, meaning that it's not like a University of Phoenix where everybody passes. At least that was the reputation they used to have, that as long as you paid the fee, you were guaranteed to pass. The degree didn't really mean anything. So it's I've been through the university system. I've been in the university system my whole life. There is no compelling reason today for a 4-year program. There is no compelling reason for a 4-year program. What books do you recommend to your younger investor self? What books would I recommend to my younger investor self? I don't know that I would recommend any, saying, okay, you got to read this, you got to read that. I'd probably say once you get past the textbooks, jump in the real world, jump in the pool. It's the better way to learn. At some point, you got to stop reading books. What's a good book for this? What's a good book for that? The real world. Just jump in. After so many books, another book's not going to do anything. Stop reading, start doing. Right. So I don't know that I would recommend a lot of books. I would say open up a paper account somewhere and just jump in. You will learn so much. If somebody throws you in a pool, you'll figure out how to swim very quickly. Right. You'll figure it out. Jump in. Just jump in. Where would you move your cash positions once bond and interest rates are cut consistently? Well, I've already talked about that in new positions in the applied level. So if you go to portfolio construction, you'll see a new folder for new positions. Go to the August 30th one, and I lay out five that I am actually doing allocation factories on. That's already in there. How do I calculate TLT fair value? Don't worry, it is fair value, or at least the range mathematically. It is fair value. It's as fair value as you're going to get. It's an ETF. So the authorized participants will take advantage of arbitrage the moment the price gets out of line. So because you have authorized participants willing to accept or deliver the whatever the creation basket is, it is its fair value. So you don't have to calculate its fair value. It is its fair value. It's not a closed-end fund where it could deviate from its fair value. It is its fair value. Are you back in Canada permanently? No longer in Costa Rica. Not right now. That's the Canadian door back there. Oh, where are we? There we go. That's the Canadian door back there. I'm in Canada now. And on the 19th, Air Canada. I called it Crap Canada. Air Canada flies me back to Costa Rica. What hobbies do you have outside of finance? Hobbies. I don't know that I have hobbies. I don't collect things. I don't know that I have hobbies. No, I don't know that I have hobbies. Saw all of your videos, level 2. Found it some difficult to connect it to practice problems on learning ecosystem. Any recommendations? I have. I don't think that I've done a level 2 video for 2.5 years. And on the learning ecosystem, I know they don't update their questions from year to year. I'm sort of out of touch with level 1 and level 2 at this point. Are we in a decade where active investing will do better than passive investing? No. Active investing has never done better than passive investing. If you're talking about the group, 80% of fund managers, active managers, 80%. And this is a stat that's been around for a long time, almost year to year. 80% fail to outperform the benchmark, only 20% do. And over a 4-year period, almost none outperform their benchmark, especially after fees. That doesn't happen. So the question, is obvious, is why would you ever go in for active management if after fees they simply don't as a group? The only reason they exist is because you think that you can pick the ones that can outperform. But over the long term, they don't. So no, I don't think that they'll outperform. Again, as a group, no. How would you define your performance and costs of the trade if you put on a same issuer swap trade in IG investment grade developed market credit, where you sell a rich bond and buy a cheap bond in terms of, I don't know. I'm not a fixed income trader. I don't know. I don't engage in those kind of trades, so I wouldn't know. Let's see if we can break it down. Same issuer, IG in developed market credit, where you sell a rich bond, buy a cheap bond in terms of G spread. When you say, how would you define your performance and costs of the trade? I mean, I don't know anything about the cost of that trade. Yeah. Beats the hell out of me. I usually listen to this throughout the week while I work out. Thought I'd drop in during a live session. Black and red is sweet. There is one where you can get it all black, but it is fundamentally a different chair. When you sit in it, it's a different chair. This one feels like the seat in my truck, except for these things. But these wings really don't do much because I never touched them really. I'm gonna try it this week coming up without the backrests on them. See what happens. Government's abusing federal spending to get economies out of recession instead of fixing the underlying structural issues. But listen, do you think they know any different? Do you think they know any better? And do you think that even if they were told what the underlying structural issues were, they would even do it? Spending money gets votes. That's all they care about. They don't care about you. They don't care about the country. They really don't care. They care about themselves. They care about power. They care about staying there long enough to hit the speaking tour. That's it. You're just a means to an end. Your country is just a means to an end. Your tax dollars are just a means to an end. That's all they'll do, is spend money to get economies out of recession. Don't look for government to really fix anything, because whose ideology would you be using to fix it, right? This ideology we have now of wealth redistribution, that if we take from people who made it and we give it to people who don't, we'll have a better economy. No, you won't, because the people you're giving it to are not suddenly going to start making it. They're just going to continue to accept it. And the people you're taking it from will eventually leave if you continue to take much from them. So you're not really fixing the underlying issues. How you fix the underlying issues is you reward the ones who create. But we don't do that anymore. We punish the ones who create. So what do you have left? Well, let's spend our way out of this. We've done it before. Let's spend our way out of this. And when your elections are nothing more than popularity contests, like I said earlier, you get the politicians you deserve. Do you really think the Russell 2000 short is a good trade? It has been, so yes. Do you think they'll cut interest rates next Wednesday? Yes, absolutely, 100%. Have you taken a look at ABR 12 put? It's trading for about 90 cents, and the margin requirement seems very low relative to the premium. No, I have a position on now that I'm comfortable with. I'm at the price it is right now. I think it's trading in and around its book value per share. If I add to my position, I want to add to it on a significant sell-off. I want to steal it. I don't want to buy it at fair value. Why do you prefer on semi over others? In the comment section under the video, I have been asked that several times, and I've laid out my argument of why I like on semi. Trying to build an FX hedge structure in Costa Rica, hard to play one, no liquidity for deliverables. Hedge into what though? Hedge into colonies? No liquidity for yeah, I don't think the colony is isn't opposite any pair. I don't think it's a traded one, only because the US dollar is almost it's not a de facto currency, but it's a viable alternative currency. Anywhere you go, you can pay in US dollars and they'll translate it into US dollars for you very quickly. So I'm not quite sure exactly what you're trying to get done down there. Argentina, people receive part of their salaries in crypto due to historical government screw-ups in the economy and monetary policy. They must have to convert it to some kind of currency really quickly, unless you have prices everywhere in crypto that don't change. That's the only way to have a stable currency. What's your opinion on ICT trading? All these acronyms. What's ICT? Information, ICT. I'm drawing a blank. I can see how in the US crypto wouldn't be needed, but in a third world country, it helps quite a lot. Yeah, I can see that. Problem is, it's just not big enough of a market financially to justify valuations. So I'm not saying that there is no application at all anywhere for this stuff, but the applications there are, all the use cases are not global. They're too small to justify the valuations of these crypto coins, especially when you add them all up and you figure out what the valuation of everything is. All the use cases are simply just too small to justify that. This week's market update on OAS. Any theories as to why you think investors are piling in a triple C rated debt? No idea. No idea. Maybe it has the if you expect rates to drop and the economy to improve at the same time, as a credit investor, what you do is you reach out your duration. You want more spread duration. So you want more interest rate duration, more spread duration. You can either buy longer dated corporates, or you can go lower credit quality and get bigger spreads. So there could be some thinking that's, why not take a flyer on that, right? How old are you? I just had my birthday. I'm at that age where I'm not proud enough because I've made it to this age. Like if you're like 82, you say, I'm 82. Anybody 82? I'm 82 because, wow, that's a milestone. You're proud to get to 82. I'm 90. People who are 100, they don't hold back. They tell you they're 100. I'm 100. I'm 100. I'm not old enough to be proud of my age because I've lived that long. But I'm also not young enough to be proud of my age. So I'm in that gap where you get past a certain age where you're not young anymore, but you're not old enough to be proud of your age. So I'm in there. Yeah. You'd have to be in around my age to understand what I mean by I'm not old enough to be proud of my age. Uh, do you believe there's high probability of recession, strong correction in the next couple of years? Tough to say. Well, tough to say, but next couple of years, I think, I don't know, probably more than the base case. But I certainly, I mean, I don't know. I don't know. I look good for 70. I look good for 70. Just register. If I were 70 and I look like this, I would be saying, I'm 70. Can you believe that? Just register for the applied level. What's the best way to start? Just jump in. Whatever you're interested in, just jump in. Attorney looking to transition into finance. Coming from the dark side to the light side. Any advice? Do you think a CFA is a good way to demonstrate proficiency to future employers? Yeah. Or should I go to MBA top university? That's going to be expensive and time consuming. A CFA, I think, is a good way to go. Weight is 90% diet. Yes, it is. Where would you move if you feel like I'm done with Costa Rica? Do you ever think about moving to Himalayas, leave everything behind and restart after some time? My life is going too well to think about leaving it all behind. There's nothing I want to get away from. If I had stress in my life and I was tired of this and this is a real pain and I hate my job, then I'd fantasize about getting away from it all. But I don't fantasize about getting away from it all. Everything behind, restart after some time. Nope. You feel like you're done with Costa Rica? I don't blame you. Well, I'm looking at Panama next only because of the residency requirement. I don't have to stay in the country for 6 months. Higher insulin levels also increase starchy cravings. People end up in an endless cycle of overindulgence. Yes, they do. Exactly. Fructose in the fruit isn't so bad because it's usually paired with fiber. Yep. Oh, look at that. This is from way back. It's the same thing if you want to look at the other side, muscle gain. Non-insulin sensitive individuals gain fat over muscle. Can't find the Costco video in the applied level. My God. It'll be up tomorrow. You're so right about modulating insulin. About a decade ago, I was big into bodybuilding. When it came to shedding fat, carb cycling was my bread and butter. Mid-20s, have saved, invested 100K. That's pretty impressive. Friends say I'm greedy for money. Yes. But I'm having trouble convincing them that they need to save for their future and not spend all their money. Whenever you're doing well, you're going to have people around you that just, for no other reason, they just want to bring you down. I would share less with them, right? Just share less with them. That's all. If you're proud of your accomplishments and they're not proud for you and they're not happy because you're on the path that you want to be on, they're just taking you down, a little bit of jealousy in there. That's quite common, by the way. Just share less with them. Lam Weston, have you been putting on shorter term options trades to reduce your cost basis? I started doing that. I've reduced my cost basis enough. Where is my so depending on how things work, I cannot lose. If Lam Weston ends above 65, I make great money on this. Between 60 and 65, I end up doing well because I have more than $5 in puts versus the money that I have in calls. I'd be put and called at the same time, but the spread between the 65 put and the 60 call is more than $5. So I walk away with a gain, and the 60 puts would lower my average. I cannot lose at this point unless Lam Weston goes. It would have to drop below $55 for me to really suffer. And I don't see that happening. On Friday, when things were selling off, it was up. So I don't see that happening. In fact, my bigger concern is it goes above 65. And then I don't get a chance to do more 60 puts. I'd like it to stay between 60 and 65 till next Friday. It's asking a lot. I don't know. We'll see. But at this point, I don't think I can lose, barring another big $10 drop, right? Anti-dilution is the idea that if a company's losing money, then all options are anti-dilutive. Nope. No. But when they start making money, the options are dilutive. Not necessarily. That's not the way it works. It works based on the strike price and the share price. So let's say that I have options with a strike price of $20 and the stock is at $25. Those options are out of the money. They can't be dilutive at all. But if the stock price drops to 15, they suddenly become in the money. They are now dilutive. So you can have an unprofitable company that's losing money where the stock price is still above where the stock price is below the strike price. I should say below. I just reverse what I said. If it's below the strike price, then no, it can't be dilutive at all, simply because no one would opt to exercise at 25 when they could buy it at 20. Right? So it's about what's in the money. Usually when a company is profitable, their stock price is rising, which means the options are more likely to be exercised, which means the options would more likely to be dilutive. Your view on 7-Eleven rejecting Circle K's offer. I don't follow those, so usually on your first offer, it makes sense to reject your first offer. That's usually an opening gambit, but I don't know enough about that one. What's your investment philosophy and horizons in your position video? It varies. How's your Spanish now, amigo? The time it takes for me to really learn the language didn't make a lot of sense. So I just have people around me that speak the language for me. I don't have to worry about it. Where are we? Okay, I'm going to scroll down all the way to the bottom and read up so I can get to the ones at the end. CFA level 1, there are LOS that don't have any keyword calculate, yet there are calculations in the example and formulas. Then you don't have to worry about them. You may be asked a conceptual question on it, but you won't be asked to calculate anything, but a conceptual question is still on the table. Reward yourself with a nice car that you'd like to own. It would be the new Corvette, the ZR1, over 1,000 horsepower, but good luck on getting any allocation for that. I'd be on a waiting list for how many years? I'd have to buy it at much higher price than sticker. I don't have an in on that one, so I can't get that one. I'm not a big car guy anyway, so. Did you used to play only role-playing games? Did you play live tabletop too? Live tabletop games? You mean like billiards? I got a pool table in Costa Rica. I used to play billiards. I had a pool table at my house in LaSalle. Not here though. It sounds more fun than what it really is, but unless you're really into it, it ends up just sitting there and being something you throw clothes on. But I do have there's a separate room at the house in Costa Rica. You walk down the stairs, you slide open, all the doors slide open. It's nothing but a room with a pool table and couches in there. So there is a separate billiards room there, but I don't really play it that much. So I used to. Comment on investing strategy would be optimal to do in a TFSA for Canadians. That's usually a buy and hold. Limited options, which you're going to just buy and hold and forget. Buy and hold, good dividend payers that increase their dividend over time. So in Canada, those are your banks, REITs, utilities, things like that. I'm not your age, but you explained it really well. I can see what you mean. There you go. FX market conditions to try and determine outcomes. It seems like the FX market is very prominent in the news with the yen carry trade unwinding credit with crashes in U.S. markets. Is this where leverage is coming from, and how do you monitor FX market conditions? Nobody knows what the other side of the yen trade is. You can just guess at what it could be, but nobody really knows what it is. And it's in the news because it's in the news. I know that sounds circular, but if only one person talked about it once, it wouldn't be in the news, even though it's something going on. But because it's talked about a lot, it becomes something that you talk about more. Because do we have any experts? Can we get more experts in than this show, than this show? And then pretty soon everybody's talking about it because it's the thing to talk about. So it's a big thing in the news because it's a big thing in the news. It's self-fulfilling in that respect. But we have the yen, I think, at 142. Other than the initial unwinding or the initial belief in the unwinding, it's been relatively benign. It hasn't caused the dislocations people thought it would. I think it's affecting the peso the most. So, I mean, I am looking at the peso as something that I want to be long at some point. Oh, let's see. Good questions. Where are we? How much weight technical analysis has my decision? 0. In fact, I'll be listening. Sometimes I listen to Thoughtful Money, Adam Taggart. He's pretty good. He's got some good guests on there sometimes. I shouldn't say sometimes. Say 70% of his guests are big names, and he asks good questions and good follow throughs. He's a good interviewer. But he has a regular person on who's really into technical analysis, and I can't listen for more than 10 minutes. Once it's this and this and this, and the regular person he has on has this uncanny ability to always, always sold at the top and bought at the bottom of everything and called everything. It's like, okay, I know this is not true. And it's all, it's all about lines on charts. And I just don't listen to that one at all. When I see that one, it's like, I'm not interested in that one. And whenever there's another group of guys too, I forget what show they have. It's two guys, maybe in their 30s, heavy on CNBC. They have a show, but most of their guests tend to be technical analysts. And it's like, okay, as soon as you start talking about lines on charts and you start showing these charts and saying, look at this line, look at that line, I'm out. I'm out. It's uninteresting because there's nothing there. There's nothing there. There's nothing there. So, how does one judge corporate governance of a company? Well, there's a whole bunch of different things that you want to see based on the who's on the board, the types of directors that you have, how many independent directors you have, the different committees that they have, who's heading up those committees. There's always an assessment of the accounting system by the auditors in terms of, is it solid? If there's, I don't know, it's not my thing, governance, but if there's any weakness in the system at all, in the end, good management really, and even that in a large organization sometimes just doesn't work out for you. Didn't work out for Wells Fargo, didn't work out for TD. So on the Loonie Hour, I recently heard someone refer to tech stocks as high duration. That caught me off guard. Are tech stocks associated with interest rates due to discount rates of retained earnings? That's the belief. Is higher interest rates would hurt their price. So since they have a sensitivity to interest rates, we say they have a duration component. And we say high and low when we talk about duration, as opposed to long and short. Long and short, you use as a measure of time. Duration is a measure of sensitivity. So it is proper to say high duration. In other words, that they're sensitive. They have a high degree of sensitivity to changes in rates. It didn't really work out that way over the last little while. Rates went up, tech went up. So, but typically, now here's the thing. when we say typically, what we mean is demand induced inflation, rates that have gone up because of demand induced inflation. What we had was supply induced inflation. All the relationships are off the table when you have supply driven inflation. They are all off the table. So you can't look to history and say, well, this happened, this happened, this happened. All the rules are off the table. Typically, tech stocks tend to hurt late in the cycle because of the higher interest rates, typically. But that's not what we had this time. Regarding financial modeling, will it be a follow along like other course providers, or would it be more of like an equity research you understand about company to build out the model? No, this is a long process. It'll be 40, 30, 40, maybe even 50 hours long. And I am not giving you an Excel model. I'm not giving you the Excel worksheet where you download the worksheet and it's mostly done and you follow along. No, 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 no. You will build your own. You will start from a blank Excel worksheet and we will enter every single line item. But you need a plan. You can't just go to a spreadsheet and start entering stuff in. You need a plan. So we're going to spend some time on planning first. Then we're going to go to Excel. Then we're going to lay it out. As far as being an advanced Excel user, it's not me. I will be the first to admit that I'm not an Excel pro. That there are plenty of courses for free on YouTube that'll turn you into an Excel pro. You don't need me for that. What I will give you for financial modeling is best practices in terms of the layout, why we would lay things out the way we do. So financial modeling, I think, is big on how are you going to model this line item? How about this line item? And you write your algorithm out first before you even go to the spreadsheet. Once you go to the spreadsheet, how do we lay this out? The Excel keys, so that your hands never leave the keyboard, all of that stuff, that's something you can develop that skill on your own. I'm not teaching an Excel course. It's financial modeling. Financial modeling. You get that? Whereas other courses, at least all the ones that I've reviewed, are financial modeling. Do you see the difference? Trying to find this long one. I know you mentioned that you're selling puts on TD. Recently quit for another job along with 4 out of 13 others at the branch. The money laundering provision caused a hiring freeze, which means we hired no new tellers, which caused bankers to have to work as tellers without hiring off of the table. With hiring off of the table, it's a long-term issue, but it's definitely an issue that will present in the long run. Staff are leaving. I don't know if that helps. Just wanted to share. Yeah, I've seen issues with, when you walk into a branch at a TD office over the last number of years. It doesn't take much much eyesight to see what's going on back there. I've noticed it for a while, and I'm sure there's going to be an exodus of staff leaving. I think the only, and maybe you don't want to hear it, maybe, but the only pushback I would give on that, or the only opposition that I'd put up on that, or the counter that I'd put up on that is, if they didn't want you to leave, they'd make an offer. That if there are some people who are quitting and leaving, that there is someone in the organization saying, okay, well, we can let these ones go. We're okay with that. That we want to reduce headcount anyways, and what we're losing, we're okay with. That if you were one of their superstars, I think maybe they'd probably pull you aside and say, "Look, what can we do?" That would be the counter that I would have, because an organization is probably going to do a lot before its high end talent walks out the door. But if it's just rank and file, maybe they're comfortable with that. Maybe it's a layoff without announcing a layoff. Maybe it's a way of getting their costs down without actually making the announcement to investors. I don't know. If you're saying that there is an exodus of people that are leaving, um, and if they're not doing something to say, look, hey, wait, come back, what can we do? If they're not doing something like that, there must be some level of comfort on their side to letting it happen. I don't know. A thought. Whenever I hear something, I like to think about, well, what if it were me? What if I were on the other side? What would I be doing? And I don't know that I would let something happen to me that I didn't want to happen. Unless I wanted it to happen, then I would let it happen. Kind of like a girl walking out of your life saying, I'm leaving. Oh, I hate to see you go. No, don't go. I mean, if you're leaving, kind of like if you're leaving a relationship and the other side is not fighting too hard, you kind of have you know, you tell me what you think of that. I don't know. I have a Herman Miller Aaron, got it for 300 size C adjustable arms. I think I did try, now that you say that, I think I did try one. There's I think I bought it off of, I forget where I bought it. It was like a mesh chair, like, all mesh, really comfortable. What I didn't like about it, I think it was Herman Miller. What I didn't like about it was the front bar dug into the back of your legs. Every time you curled your legs up under the chair, that bar just dug into your legs all the time because it had no real padding around it. Maybe it wasn't a Herman Miller, but I can remember being in some furniture saying, "Oh, everybody wants this one." It was like $1,200. It was this mesh, it was kind of like a thick mesh that you'd sit in and you go, okay, well, this is nice. This is not, until you put your legs up underneath the chair. You know how you kind of curl them under to get a little comfortable, and that bar just dug into your leg. Didn't really like it. What would you do if you were friends with a person for a long time and you really care about them, but you feel as if they lack empathy for you and disregard your feelings often? I've had that situation. I have had exactly that situation. Um, Eventually, you stop talking to them about things, because you're not going to get anything back in that respect. So you think, okay, well, there are certain parts of my life that I'm just not going to share with you, because what would be the point? And eventually, it just does this, because eventually you talk less and less about things that are important. You talk less and less about things that you care about, and the other person rambles on about something, and you think, why should I give a shit? Like, why should I care? Like, why should I care? I mean, this seems like a one way street. So eventually, you go your separate ways, you drift apart. But yeah, that I did have a situation like that where the other person would talk endlessly for hours on hours about their life, and you'd bring up something. It's like, I don't want to hear it. Keep it to yourself. Ah, see how it's raking on my nerves right now, because I can hear it. Don't want to hear it. Keep it to yourself. Don't want to hear it. Keep it to yourself. You can only hear that so many times before you go, fine, I'll keep it all. I'll keep it all to myself. The other thing is, you could just say something. You could just say something. You could say, if it were me and you said this, I would think, here's somebody that needs me to listen to them. Right? Most people, when they share their problems, most people, when they share their problems with you, are not asking you for a solution. They're not saying, fix my problems. They just want to be heard. They just want to talk it out. They just want someone to listen. You don't actually have to solve the problem. And guys, I'm speaking specifically to you. How many times has your girlfriend said, oh, this is bothering me and this and this? Well, this is what you have to do. You're doing it all wrong. They don't want a solution to they're not asking you to solve their problem. They're asking you to listen. Just listen. Be a good listener. Be a good listener. And you can create a lot of goodwill with that. So if they're not showing any empathy, say it. Maybe they're unaware. Maybe they're unaware that they come across that way, right? I know when I'm going to insult a bunch of Americans now, but I got to say it because I lived in the US for a long period of time. And when I came back to Canada to start teaching in a university, I got accused a lot of time in the reviews of being rude and arrogant. And I can think, but how? How can you figure that? Like, and it didn't occur to me. Then it occurred to me when they said, no, it's just I'm too American. I'm not rude and arrogant. I'm just too American. Because in the US, no one ever said that. I never got that kind of feedback in the US, but you get to Canada, you get that kind of feedback. You're thinking, but how? So it's sometimes the other person might not even recognize that they're being perceived in a certain way. So it could be that your friend has no idea that they're behaving that way because maybe the culture within their family or within the social circle that they've hung around, that wasn't stressed. Maybe it's something like that, right? I should have a kind of like a therapist corner live session, right? I don't know. I'm sure there's somebody out there who's probably more trained in this saying, oh my God, is he giving the worst advice in the world? I turned 21 in 2.5 hours, and there's no place I'd rather be than this life. Wow. That's nice. What's so good about Justin Trudeau? Well, you got me there. I don't know. You got me there. That must be a follow-up to something. I don't think I said anything about Trudeau being good about anything. He is, by the way, one poll, he is now officially, I guess officially by this poll, the worst prime minister Canada's ever had. I don't know that I would get much disagreement from anybody, and that's the thing. That's kind of how you know that poll might be right, because almost everyone I talk to hates this guy, wants him to go away. They just want him to go away. But he's very much like Trump. He's not going anywhere unless he wants to. He's not going anywhere, and I don't want him to go anywhere. I want him to stay right where he is because he's guaranteed to lose. Guaranteed. You swap somebody else in there, now the Liberals might stand a chance. Can't have that. I want him to stay right where he is. So yeah, no, there's nothing good about Trudeau. I see someone behind you. Did you really? What did they look like? Because I tell you, when I'm alone in this house sometimes at night, I think I hear voices upstairs talking behind a door. I go and I listen. I go, there's somebody upstairs talking behind a door. I know there is. But I go up there, there's no one talking. So if you saw somebody behind me, I'm living in a haunted house. I've had that belief for a while. All right. I think we're good here. Can you share your YouTube demographics, age, gender? It's about 90% men. But YouTube skews mostly men anyways. So that's not shocking. YouTube skews mostly male, where I think it's Instagram skews heavily female. YouTube skews heavily male. That I think it's 80% male anyways. The big group is I think it's the 24 to 34, 25 to 34. Yeah, that's the biggest group in there, and it skews mostly male. And I think that's it. What time is this happening tomorrow? What time will the videos be up? Early afternoon. Early afternoon. I got a certificate in technical analysis from CSI after your CFA prep. I discounted all of it. Well, I mean, board games. Oh, board role-playing games. No, never got into that. You mean like Dungeons and Dragons and things like that? Magic? No, never got into that. Never got into that. Someone who has no math background except basic addition, subtraction, no probability calculus knowledge, can they still make it in equity research? Yeah. Equity research is a lot of addition and subtraction. Sometimes a power term, like 1.07 to the power of 4 would be about it. No calculus. All right. I think we're done. There we go. Yeah. 3 hours, 20 minutes. It's 10:35. And maintained over 100 viewers all the way through. I've got 180 at one point. These are getting more popular. That's good. Okay. I'm done. Good luck in the week coming up. And remember, Wednesday, 8:30, big risk event. You got CPI. Don't get crazy in front of CPI, right? Because that comes in the wrong way. Things could get ugly fast. All right. Ciao.